but then it goes back into me flapping my gums. So if you were trying to watch it, Andy helped me out yesterday. He goes, dude, you lost audio. Turns out I didn't lose audio. I just got distracted, guys. There's a lot of shiny things in my office. Tough to stay focused. How's everyone doing? You guys feeling good? You ready? Excited? Did you avoid news this morning? Did you see that crazy news? And say, man, I don't want to jump in front of that. I know exactly when it is. Hey, good morning, Adriana. What is today? Today is Friday, June 7th, and at 8:30 a.m. the market went absolutely nuts. It was fun to watch and impossible to trade from where I was sitting. And then not a lot going on for the rest of the day, guys, but I check news every morning. That's part of my pour a cup of coffee, open my charts routine to make sure that I don't trade into that little emotional response that may be going on. Everything that I'm going to talk about today, guys, you're going to find from the Nexgen page. Specifically the trading guide page. This is all the definitions, all the rules, the pictures that you need, the videos that you want to watch. I mean, everything comes from this page. And I think the most important thing on this entire section is the glossary of common terms. And this one right here, guys, the high probability trend trade. This is a trade that I talk about for an hour straight. This is a trade, good morning, Muser, that each indicator on every chart agrees with the rules for the trade. You're going to have the strongest triggers and no termination conditions. No trouble between your entry and you. And guys, I'm going to tell you right now, focusing on the high probability trend trade gets you zoomed in as a chart reader. It gets you hyper focused on advantages. And it creates this awareness of what your indicators are telling you. This is the trade that typically wins 70 to 80% of the time. Guys, this is where your confidence comes from, the memory of success. And this is the one that turns you into a chart reader. And when you're a chart reader, what you're going to understand, and this is pretty cool, is where the market is likely to continue, likely to go, likely to stop. You're going to have this super awesome understanding of what your indicators are telling you. So we're going to focus on learning to read our charts. Not so much take the trades. Guys, you're going to see 1,000 opportunities every day where you're like, that's my trade, that's my trade, there's some money, that's my money. Guys, it's not all yours. One of the great things about having rules is rules have been tested and rules are repeatable and rules have a very specific pattern that have been proven to win more than they lose. And that's the goal, is to have a plan, a system in place where you can say, because of this pattern, I have the ability to win more of these than I lose. That gives me a statistical advantage. That's why I'm going to take this trade. Guys, give me a Y if you can hear me. It might just be me. Nobody? Yes? Okay. So we'll get Jonathan to reboot. Why what, TLC? Oh, man, I totally fell for that. That was funny. That went right over my head. All right, TLC had his coffee this morning. That was good. Guys, being a chart reader is where it's at. And I put this picture in the room, and it's just silly, but it's pretty true, I think. When you know what you're looking for, when you have a set of rules that you're following, and of course this isn't going to load up because that would be way too easy, right? When you have no misconceptions about what it is going to take to get you into a trade, you know where your advantages are. Guys, you're not searching, right? You're not looking at everything trying to pick that thing out. You know exactly what it looks like. You know exactly what has to happen to get you into that market, and you understand completely that those are your advantages. And that's what we're going to do, guys. 10% of your day will be spent looking for those advantages, or 90% of your day will be spent looking for those advantages. 10% of your day will be spent capitalizing when the rules are met. But you've got to learn the rules first. So that's what we're going to do today, guys. We're going to talk about the rules for a high probability trend trade. We're going to talk about 3 simple rules, guys. That's it. Each rule provides an advantage, and the advantages are momentum, and that's going to come from strong triggers. The second advantage is a clear path when there's nothing between you and your target. And the third advantage is going to be finding that entry area. The first two advantages are going to stick with you for life, guys. The first two advantages are going to lead the way. They're going to be the reason that you're looking for trades. The third advantage, the entry area, is going to change with the seasons, guys. You're going to find initially the best opportunity to enter the market where it's most likely to continue. But the study that you spend with the software, the pictures that you take, the feedback that you receive, you're going to create a plan where your entry area is probably going to adjust. You're going to have different rules than just these three rules. And that's really the focus, guys. I'm trying to give you a solid foundation so that you can grow from it. These three rules are going to happen on only two charts. There's a large chart and there's a small chart, guys. The large chart is it leads the way. That's the best way to put it. The large chart dictates whether or not you ever look for an entry. On one bar on the large chart, you're going to understand the direction of the market. You'll understand whether or not you have that advantage of momentum, and you'll also understand whether or not there's an area in your way that could be problematic. Rules 1 and 2 are met on the large chart, guys, and I'm going to say it one more time. If you skip the lesson of momentum, if you avoid the lesson of termination conditions, you're doing yourself a huge disservice. So spend a little time focusing on these two. And then what's going to happen is when the rules are met, when you have those first two advantages, you're going to turn your attention to a smaller, faster chart. And the smaller, faster chart, awesome, Jonathan, is where you're going to be able to pinpoint where the market is most likely to continue for that high probability trend trade. This smaller, faster chart is going to be the entry for your momentum trades. The smaller, faster chart is going to refine the broad stroke of a brush, break it into 20 to 30 bars, and you'll be able to see these smaller fluctuations that allow you to minimize your risk, that allow you to maximize your profit potential. So we're going to focus heavily, guys. We're just going to look at three rules, two charts, and this is where I get a little preachy, so work with me. If you really want to get to where you want to be, and I say this every day, and let me just give a little credential check here. I've been teaching people to read indicators for the last 4 years. And I've been teaching them to do it with simplicity in mind. I've been teaching people to be able to look at their charts and understand what it's telling you. And your step-by-step path to becoming a confident trader ASAP is no different than my step-by-step path to when I was trying to become a confident trader. And everything begins with posting your trades in the room, guys. Everything begins with dropping a chart in the room and telling me what you saw. And I'm going to kind of reiterate on that. Don't drop a trade in the room and go, hey, did you see this opportunity? Don't drop a picture in the room and say, I wonder if this was a short. Guys, you've got to tell me what your chart read is. If you get short, if you get long, whatever, it doesn't affect my day. My goal is to make you a chart reader. My goal is to get it so that you can look at your charts and understand whether or not you had advantages to take that long, whether or not the advantages were in place to take that short. And the more you annotate a chart with the read, what are the indicators telling you, rather than annotating it with, man, I think this was a good opportunity. What do you think? It doesn't matter what I think. So I want you to go ahead and get in the habit now. Always try to revert them back to the rules. In some fashion, you should be writing these rules on the chart. And the cool thing is that if you write that you had momentum, but you didn't, well, that opens the door for a lesson to make you a better chart reader. If you tell me that you had a clear path, but you didn't, well, then that opens the door for a lesson on termination conditions. And if you told me that you took the pullback to the triggers, but forgot to let it be to the areas, well, then that opens up a lesson for rule number 3. So what you tell me on your chart is going to dictate the quality, I would say, of the feedback that you receive. So post in the room, hey, Mark, I'm working on this. Am I reading it right? Hey, Mark, this is the trade that I took. Did I follow the rules? I wrote them on the chart, but I want to make sure that I read the indicators correctly. Every time you post in the room, you get a private session with me. You and I will talk about your chart. I'll give you feedback. We'll talk about advantages. If I see a lower risk entry, a higher profit exit, we're going to talk about it all day long. But you've got to give me that information. That's like the only request I have of you guys when you post in the room. And then use the spreadsheet that Nexgen provided. Guys, I give you my spreadsheet every day. Every day we update it in class. Every day I give you the updated version. When I say that I give you everything that you need to be successful, guys, I promise you, I give you everything that you need to be successful. But it's that old, you're all my horses. I'm going to bring you to water. I can't make you drink. I can't force you to post your trades in a spreadsheet, right? That's not my deal. I'm not some sort of enforcer. But if you do follow that path, if you do post in this room, all you're going to do each and every morning takes about 3 minutes of your life is to look at what you did yesterday, what worked and what didn't work. And I'm going to tell you right now, if it takes more than 10 minutes to look at what you did yesterday, you probably overtraded. You're going to take these what worked scenarios and you're going to repeat them. Hey, every time I had momentum, I had an advantage. This is awesome. I'm going to keep looking for it. And you're going to take those what didn't works, right? Man, I kept trading in determination conditions. I kept trading when I didn't have a clear path, and then I was getting stopped out. And guys, it may not be because it was the wrong trade. It may be because you incorporated the wrong management for that type of trade. If you post in the room, we're going to understand that. We're going to figure it out. And one of the most annoying things about me is that I don't forget stuff. I don't forget stuff. So if you post in the room 10 pictures, right? And I see you trade in determination conditions 5 or 6 times. Well, we've just identified your thing. And then you and I get to work together hand in hand to fix your thing, to get you away from that bad behavior. Rob, how much time are you spending just trying it and practicing it? And I know it's tough in the beginning. Everything takes practice. So Rob, you're getting out of it exactly what you're putting into it, right? I'm a crappy brain surgeon because I refuse to go to med school. So try something this weekend. Practice it for 30 minutes and tell me how good you are on Monday, right? And Rob, I'm not trying to call you out, but I'm telling you right now, guys, people are going to tell me all the time, Mark, I'm struggling with this. And I'm going to ask you, how much time are you spending putting your trades into this spreadsheet? How many times have you practiced building that hyperlink, right? Because the instructions are right in the spreadsheet. How many times did you follow this path to get the results that you were wanting? And guys, when I was a personal trainer in a different life, everybody wanted to lose 50 pounds, right? Everybody wanted abs. Everybody needed muscles. Nobody wanted to do the work to get them. Trading is no different. If you're not doing the work, you're probably not going to get the results. For you guys that are brand new, I developed the 101 tab. This is the second tab. And every day I beg and plead with you guys to go take 25 pictures of your rules being met. And every day you guys ignore it because it's not fun, because it doesn't seem like, man, I don't want to take pictures of just strong triggers. I can't make money like that. Guys, you're not going to make money if you don't understand strength, if you don't understand a clear path. Your job, if you're going to be a day trader, is to create recognition through repetition, guys. There's an entire section dedicated to you taking pictures and posting them in here so you can come back and study them. And guys, I can only do so much hard work for you. I gave you 350 pictures of people using the software successfully. 350 pictures of the patterns that I teach every day. 350 pictures of the people that did the work and posted their winners in the room. I've given you entry sequences for longs and shorts for the high probability trend trade. I've given you a very mechanical management plan. I've even shown you what it looks like when it's time to hold for bigger moves. I've identified and shown you patterns that repeat themselves in the markets. Your job, if you really want to be successful, guys, I'm going to put this on you. I'm going to stop taking responsibility for it. If you really want to be a day trader, if you really want to get to where you want to be, you should have this section full and you should be studying it. You should have the basics down so well that you never question whether or not there are strong triggers, whether or not there's a clear path, and whether or not there's an entry for your high probability trend trade. I can't make you do it. It's on you. So make a choice. We're going to learn the rules. we're going to learn the rules for when it's okay to trade. 700 is huge. You know what though? That's a power lifter. They need those calories. Guys, we're going to learn the rules for when it's okay to trade. We're going to focus on the very basic foundation of what we do with this software. We're going to learn the high probability trend trade. If you put a little study in, you will be able to recognize the three pieces that put it together. You'll be able to identify the advantages. Simulate, practice, get in there and trade, guys. Pull the trigger. And I'm not saying simulate just to see if you can win. Simulate so you're practicing entering the market using that Ninja Trader, right? Simulate so you can practice moving your stops and targets. Simulate so you can see how you react in the moment, but then you have to take that picture, go back and analyze it. You've got to put yourself under a microscope. The goal is that you don't practice the wrong trades, because the wrong trades create a false sense of security. When you're jumping in and getting lucky, what happens is that works great until you go live, and I swear there's cameras everywhere. Once you go live, that luck runs out. And Paul, thank you for that. It's true. Do your homework. Everybody that's gone through and started filling out that spreadsheet has told me, Mark, it's amazing. I'm seeing things so much faster. I'm seeing things with such clarity because I stopped looking for the trades and I started looking for the advantages. You've got to simplify in the beginning, guys. You've got to keep it easy. You've got to keep it focused. So let's focus on a high probability trend trade. Let's get really good at that trade. Let's get really good. Doug, it's in your Nexgen study picks folder. That's where it is when you download software. But I drop mine in the room no less than 5 times every day. So I just did it again. There it is for you right there. So what you can do for you guys, and I didn't realize this, there's a download button that'll put it in your download section, or you can literally click on that blue link and pull it right over onto your desktop and it'll drop it right in. So take that spreadsheet, learn to use it. We're going to keep it simple, guys. I'm going to give you a plan that optimizes your chances of success using that high probability trend trade. I'm also going to incorporate what we call a medium probability trade. So I'm going to give you 2 trades to focus on. You have to understand the looks. What does it look like? What does it look like when I'm not trading? What does it look like when I'm not full of adrenaline? What does it look like when I'm not scared of losing? So that when it sets up in a live market, I know exactly what it looks like. I know exactly where my entry is. I know exactly what I'm looking for. And if you do that, what happens is these looks become easy. The more pictures that you take of strong triggers, the easier it is to recognize your first rule being met. The more pictures that you take of termination conditions, not the more trades you take, the more pictures you take of the market literally stopping at a Fibonacci area, right? Literally stopping and bouncing at a Fibonacci area. Guys, I'm telling you right now, if you've never just scrolled back and watched the power of Fibonacci, watched the power of the software to stop the freaking market in its tracks, well then you're going to be more inclined to trade into these areas because you don't believe it. So you've got to develop that trust, and you're going to do that through your practice, through your picture taking. The more pictures you take, the easier it becomes. So a little soapboxy this morning. My apologies, guys. And I'm doing it. This is like your parents when you're 15 saying, hey, Pete, that's a bad idea. You probably don't want to show up to the Rumble, right? You're going to get your nose broken. And Pete's like, oh, whatever. I'm the toughest kid ever. And then he comes home with a broken nose. And the parents are like, God, I tried to save him from himself. But you know what, guys? You're going to make mistakes. Make those mistakes, but share them in class, because then we'll work together to avoid them. 2 charts is all we're going to use, guys. That's it, Cindy. I thought that was a carrot on there first. That's the hands saluting. Guys, the large chart's going to lead the way, right? Your large chart's going to lead the way. Your large chart is going to tell you what direction the market is moving. The path of least resistance is following that direction. The large chart's going to tell you if you have momentum in that direction. If you do, the path of least resistance is to trade with that momentum in the direction. And then it's also going to identify the areas on the large chart, guys. And these areas are where the people that move the market are making decisions. These areas are where the buyers stop buying and where the sellers start selling. And these areas are where profits are taken and fights happen. And you're going to be able to identify them using the large chart before they become problematic for you. So rules 1 and 2 happen on the large chart, momentum and a clear path. And then your small chart is just an entry chart, guys. It's just a way to get into the market. So let's go through it. Large chart must have strong triggers. Large chart has to say that you have momentum, guys. This is the first rule, and there are plans built around momentum. There are plans built 100% around the idea that when the market is screaming in one direction, it's very difficult to stop it. Strong triggers on the large chart. If the background is green on your large chart, the market's going up. And if the market is going up, you should be going up with it if you don't feel like fighting everybody that's in charge. To have strong triggers, the only way you can have it, guys, your small triggers, these solid lines, the large triggers, these dashed lines. And I'm going to tell you right now, don't worry about what creates a trigger. Guys, I have no idea. I'm not a tech guy at all. But I do know without question that when my small triggers are up above my large triggers, when my large triggers are widening, they're beginning to open up like jaws coming up. Guys, that separation between the small and the large lets me know that the odds are favorable for the market to continue up. The odds are favorable. I love that phrase. And we're going to call this odds favorable momentum all day long. When the background is red, the only way I can have momentum is if the small triggers are below the large triggers, if the large triggers are widening, if everything is red. That space between the two lets me know that the odds are favorable for the market to continue down. When I have odds favorable momentum up, this is the best of the best time to use that refinement chart, to buy Fibonacci support, to buy that pullback. Guys, on a large chart, one bar looks like a tail or a wick. We don't trade these tails or wicks, guys. We refine that one bar on the smaller, faster chart, but you will be able to pinpoint exactly where that tail is most likely to form. When you have odds favorable momentum short, guys, you will be able to pinpoint exactly where that tail is most likely to form by selling Fibonacci resistance on a smaller, faster chart. Odds favorable momentum, guys, it leads the way. It pushes the market. Odds favorable momentum creates an advantage that becomes very easy to recognize. And let's take a picture. So for you guys that are still new and a little shy, that won't post in my room and show me a picture, I'm going to show you how to use capture software real quick. You have it. It's on your computer. Smash that big red button. And guys, just click and drag what you want to take a picture of. It's going to ask you to take the picture. Once you do, it's going to give you a preview. Can you guys give me a Y in the room if you see that the small triggers are above the large triggers, that there's space between the two? This is a strong trigger look. This is a look that says the odds are favorable for the market to continue up. This is a look that has the ability to break these key Fibonacci areas. This is a look that's going to cover up some of the mistakes that you make as a new user. So go in the other direction. Do you guys see how the smalls are below the large, how the large are wide, they're angled in the direction of the trend? Once again, guys, this is your strong trigger look. So what do strong triggers mean? They mean momentum. What rule is that? That's rule number 1. Does anyone in this room feel like if they took 25 pictures of strong triggers that they would ever make the mistake about what strong triggers look like? I hope not. Upload it, guys. Grab that screencast link. And if you're not sure, if you're still learning, I cordially invite you, drop that picture in the room and let's talk about it together and make sure that you have the right look. And if you do, let's go to that 101 tab. Guys, this is 34th picture of strong triggers that I've taken for you guys, which means that if you just got this spreadsheet, your job is to take it up to 59. But that's your strength. It'll never change. I don't care if it is a large chart, a small chart. It doesn't matter if it's a range chart, if it's a daily chart, if it's a monthly chart. Doesn't matter if it's crude oil, if it's stocks, if it's crypto. Strong triggers are a constant, guys. Strong triggers look the same on every chart. This is your first lesson. This is your first rule, the advantage of momentum. But strong triggers don't last forever. And you have to accept that sometimes your advantage goes away, guys. And your advantage goes away when the small triggers work inside of the large triggers. When the smalls enter the large, this is a weakness, a weakening of the large triggers. And when I have weak triggers, anything can happen up or down. I'm a big language fan. Odds favorable for the market to continue down. Let's sell Fibonacci resistance. Anything can happen. To hell with it. Let's stay out of the market. My advantage is gone. And the cool thing is once again, let's just take a look. There's that weakening. It happens to be right at one of those blue lines. And look at the bounce. There's that weakening. And look at the huge retracement that came off of it. Let's see if we can find it again. There's those weak triggers and a big bounce down. Man, these blue lines sure seem to stop forward progress, don't they? So do these yellow 1-to-1s. Wait a minute, so do these red lines and these blue lines. And weak triggers at one of these areas, guys, that's a market killer. Weak triggers even from the middle of nowhere. Anything can happen up or down. If you go back and you take these pictures, you're going to learn to trust it. Guys, do I have odds favorable momentum? This is crude oil, live market. My small triggers are above the large triggers. There's space between the two. What do you guys think? Is that my best look? Is that rule number 1, Matt? I'm asking you new guys, right? I know Morgan knows it. Pete knows this. Jen is married to it. John C. says no. That's the answer that I needed. John C., thank you for having the courage to fight the system here. So, and John C., this is a very common thing. You're confusing momentum with termination conditions. So let me do it like this. Momentum, guys, is nothing but trigger lines. Momentum has nothing to do with the lines on the chart. Momentum has nothing to do with entries. Momentum has nothing to do with exits. Momentum is nothing but a byproduct of the look of your trigger lines. So let's isolate these triggers. And let me ask again. John C., what do you think about the momentum here? Smalls above the large, larger wide, angled in the direction of the trend. Without the distractions, it becomes easy to recognize, doesn't it? It has momentum. And John, you get the gold star today for saying that. Because if you guys don't learn to break these down individually, if you begin to question momentum because of a Fibonacci area, if you begin to question areas because of momentum, well, then you're splicing the two, and it's going to be more difficult to find your great trade. So right now, momentum, rule number 1 is met. Everybody good with that? We have rule number 1. While we go to rule number 2, I'm going to put my template back on the chart because, John, we are going to work into whether or not we have a clear path. But let's talk about what that means first. We know that momentum pushes the market, right? And as the triggers come back, the momentum is lost. It slows, it's lost. And when we reach one of those key areas with a loss of momentum, this momentum is more likely to stop the market, or that area is more likely to stop the market. And this is where we get into rule number 2, guys. Rule number 2 says that termination conditions must be false. Rule number 2 says that you have to have room to your profit targets. We do this by using the areas on the large chart. Your large chart areas are where decisions are made. And the large chart areas are going to let you know whether or not you have a clear path. And here's the cool thing, and John, this is where you kind of spliced it. Your trigger lines are going to let you know if these areas may reverse the market. Your trigger lines are going to let you know if this is an area that can create an untradeable bounce. Your trigger lines will literally tell you whether or not it's a termination condition and you shouldn't trade into it, whether that area has the potential to break, and you might take a shot if your chart reading says you have all your advantages, or whether that area is broken and you've got a clear path to the next area. And the cool thing is it's just lines on a large chart. Let me share this picture with you. It's just lines on a large chart, guys. It is going to be Fibonacci support, that blue lines. We saw those stop the market a couple times. Red Fibonacci resistance. Yellow 1-to-1 dots, a cyan divergence low line or a magenta divergence high line. All of these lines on the large chart have the potential to stop the market. All of these lines on the large chart are places where decisions are being made. We're going to use the trigger lines to understand whether or not they're problematic. And I'm going to show you both directions so there's no confusion. If price reaches an area, guys, this is the recipe. Price reaches the area. What does that mean? That means that decisions are being made. The most current bar, the first bar, the one that says, hey, this is where price is trading currently. When that most current bar reaches an area, if your triggers remain above the area, an area of support, this is an area that may stop the market. This is an area that may create a bounce. This is an area where the buyers and sellers may fight. Or guys, this is an area that market may just smash right through. Here's what I want you to accept as a brand new user, is that you don't know. You don't know what the reaction is going to be. You don't know whether it's going to hold, whether it's going to break. You don't know whether it's going to bounce or if it's going to rail through. Which means that when price reaches an area and the trigger lines remain above, that you no longer have the advantage of a clear path. This will be a termination condition, 100%. The second option is when the small triggers smash through the area. And I mean smash, guys. When they smash through the area with odds favorable momentum, but the large triggers haven't made it through yet, this is what we call a 50-50 look, guys. You're going to see this a lot. This 50-50 look means that this area has the potential to break, but it's not broken yet. It only has the potential to break, guys. There's the potential that helicopters will come crashing through your roof, right? But you're not going to live your life based on that potential. This is not a high probability scenario, guys. This is a medium probability scenario. I will give you a plan, how to capitalize and pinpoint where that tail is most likely to form and take advantage of this look. But you have to understand that it's not a clear path, which means that you'll manage these trades a little more aggressively. But then finally, when the small triggers and the large triggers break through the area, get below the area of support, support behaves as resistance. The area is broken. The path is now clear until you reach the next area. Guys, these are your options. That's it. This will never be a high probability trend trade. This will never be a high probability trend trade. This is the only look that sets me up for a high probability trend trade. And it's true going the other direction. This time we're going to use a divergence high. This divergence high is a termination condition because all the triggers are below it. It turns into the potential to break because the small triggers smash through. And then it's finally broken when the small and the large get through the area. And guys, you'll notice below it, these yellow 1-to-1s at one point were a termination condition. So was this line, so was this line. Some days you have to be a little patient. Some days you might wait an hour for your trade to be met. You might wait 3 hours for your trade rules to be met. But this very simple recipe for termination conditions is going to keep you out of an awful lot of trouble. So let's go back to our large chart and let's look at it. Price reaches Fibonacci support. Triggers remain above. The idea that there are no short trades to be taken there keeps you out of a loser. Price reaches Fibonacci support. Triggers don't break. The idea that this is a termination condition keeps you out of a loser. Small triggers make it through the area. Large triggers do not. The area is not broken. You'll have a plan to avoid that loser. Once again, I want you guys to see it. Price reaches resistance. Triggers don't break. No reason to go long. No reason to go long. All the way back to support. No reason to go short. Guys, how much money can you not give away in a day? By understanding the idea of termination conditions. By knowing that until both triggers get below these yellow 1-to-1s, this area is not broken. It only has the potential to break. To the tick. Is everybody good with this? Your job this weekend, if you're trading in determination conditions, your job this weekend is to take pictures, to draw arrows, and to say things like, price reached the area. In this case, it's 1-to-1s. Triggers remain below. It's a term. No long trades. No clear path. Rule 2 not met. Financial suicide. But guys, if you don't go through this process of scrolling back and watching how often these areas stop the market cold in its tracks, you're going to feel compelled to trade into them. Rule number 2 kind of helps keep you safe. So you've got to share it, right? And you've got to open up your spreadsheet and you've got to say, this is a termination condition. Why on God's green earth am I trading into these things? And if you're anything like I was when I started trading, you traded into every one of these. I did. I traded into every one of these, guys. I made this mistake 1,000 times over, and my brother coached me. He said, Mark, if you know that termination conditions are your problem, if you know that termination conditions create the biggest challenge for you, every time you're going to take a trade, every time you think you want to short trade into that area because of momentum, you have to ask yourself this question. Did price reach the area? Where are my triggers? If the triggers are above support, there's no reason for me to take it. And I'm telling you, Paul, I perfected trading into termination conditions and giving away money. And then you have to ask yourself, if this only has the potential to break, do I have the advantages in place to take advantage of it? And guys, I'm going to give you the recipe for it, but you've got to learn this simple recipe. If price reaches the area, the triggers remain below, divergence highs, resistance, 1-to-1s, you don't have a clear path. If price trades into these 1-to-1s, into this support, into this divergence low, and the triggers remain above, you don't have a clear path. Is everybody good with that? I promise you, this is going to be one of the biggest safeguards in your trading, is understanding these areas can stop the market, and all the wishing in the world, won't get you through that area. It's not up to you. It's up to the market. And guys, we are not the market. John C., there it is at lows, my friend. And hold on. And there it is at highs. So there's some individuals. But John C., man, I want you to have everything that you could ever have. So there's the PowerPoint that I use to teach this class. You have every picture that I'm showing right there in the PowerPoint now. Guys, there's this amazing, you're absolutely welcome, guys. I will give you everything in my arsenal, I promise. There's this awesome phenomenon that happens on a large chart, guys. And this is a phenomenon called the gap theory. So these trigger lines are just moving averages, and when price pulls away from a moving average, it likes to go back to the moving average. I don't know why, they just dig it. So when price accelerates away from the large triggers and smacks its head on something, whether it's resistance, a mid-band, yellow 1-to-1s, and those large triggers remain a full bar away. And guys, you're going to use what we call a reversal bar marker. If your large triggers are below the reversal bar marker as it accelerates up and away from the triggers, or the flip side is if those triggers are above a reversal bar marker as it's going down. This lets me know that there's room for an entire bar to print before it ever hits the triggers. Guys, this gap theory, price typically closes it. And when price closes it, anything you do, if you say, man, I have momentum, I can't wait to go long, more often than not, you're going to get run over. But this gap theory is what lets me know that the mid-band is behaving as a termination condition. The gap theory doesn't say go the other direction. The gap theory simply says that when there is a full bar back to the large triggers, any area that you hit should not be traded into, guys. And this gap theory is going to save your bacon when you think you're going to be in that first trade. So go back and study the gap theory. And you know we're going to do it again, right? Let's pull up the large chart. Love the large chart. Price reaches support. The large triggers are a full bar away, and it closes the gap right back to it. Even if you were thinking, but Mark, I have momentum, it has the potential to break. The gap theory says, don't do it. There it is again, mid-band, large triggers a full bar away, and it closes the gap. Woo, whoops. That usually crashes my software. Can we find one more? There we go. Mid-band, all the way back to the large trigger. So guys, these are the patterns that you're going to study. These are the patterns that you're going to recognize at a moment's notice, and what it's going to do is it's going to help save you from yourself. It's going to help save you from your opinion. So lines on the large chart, guys. Lines on the large chart are where problems may occur. Lines on the large chart are where decisions are made, guys. Lines on the large chart, 99.9% of the time is where you're going to identify termination conditions. Is everybody okay with that? You're going to want to study it for a couple days. If you give it 2 days to study 50 pictures, you'll never trade into a termination again. Well, on the small chart, remember we don't see changes fast on the large chart. It's a slow chart. The small chart's a refinement chart. The small chart, in one bar on the large chart, you may get 20 to 30 bars on the small chart. Well, on a small chart, the only termination condition, the only time I will ever say that rule number 2 isn't met, is if 3 divergences print on the small chart. Divergence means that the chart went down and it went up. About 3 bars. It takes 3 bars for this calculation to finish. If the momentum of the market, you don't have to do the math, your software will do it. If the momentum of the market doesn't follow price, you're going to get this blue line from a low. You're going to see a negative number print. Don't worry about the negative number. It's just a byproduct of the calculation. Guys, this is what we call a loss of momentum. If momentum doesn't follow, you're going to see this magenta line from a high. This is a giant signal that says, hey, the market is losing momentum. Guys, if you lose momentum 3 times in the same price range, and when I say the same price range, I want you to use the same recipe for broken areas that you'll use for broken divergences. Small and large, clear the divergence. It's gone. It's in the rear view mirror. Don't worry about it. But 3 in the same price range may terminate the trend, guys. This is the only small chart termination condition. This is the only small chart termination condition that says, hey, guess what? Rule number 2 isn't met. You don't have a clear path. Don't take that next short trade. It becomes more powerful when the small triggers are inside of the large triggers. Does everybody remember rule number 1? Small separated from the large, wide angled in the direction of the trend means odds favorable momentum. It's true on a small chart. Small's inside of the large triggers. Weakness, anything can happen. So you're seeing 3 losses of momentum coupled with weak triggers, guys. It makes it even more likely to reverse. And then 3 divergences when the final pivot is lower than the previous or higher than the previous. It creates a head and shoulders pattern. And that head and shoulders pattern adds even more fuel to the fire. And Miss Jen was nice enough to post a picture earlier. I want you to see this. Large chart says up, everything is going, the path is clear. 3 divergences on the smaller, faster chart, guys. That's what kept you from taking that last I hope the market goes up trade. And it happens every day, and these patterns repeat themselves every day. Thanks for that picture, Jim. So guys, that's termination conditions. If you give yourself a couple days to be able to recognize the advantage of momentum, if you give yourself a couple days to be able to recognize the advantage of a clear path, well then it's time to look for an entry, guys. And your entries are a small chart event. Your entries come from the smaller, faster chart. They use that refinement process. When the large chart says down, when the large chart has momentum, when the large chart has that potential to break this area, you're going to use a smaller, faster chart to pinpoint exactly where the market is most likely to continue. So much so that you're going to use a limit order. Lines on the large chart were problems. Lines on the small chart can create a bounce when they're tucked inside of triggers. So rule number 3 says that you're going to use a limit order. You're going to buy or sell a pullback. And a pullback is just a little retracement, right? When everything says up, a pullback means the market shoves down a little bit. You're going to buy or sell that pullback, and you're going to do it at areas, fibs, mid-bands, yellow 1-to-1s. And those areas need to be inside of triggers. And there's two trigger looks that you're going to encounter when you're watching that small chart. You're going to have what we call favorable large triggers, which is when your large triggers and your synthetic triggers, it's just the large trigger from the large chart. When these are overlapping, one on top of the other, guys, two snakes riding piggyback, what that does for you is it gives you the smallest, the absolute smallest area to put or smallest range to put those areas inside of. Because the rules say that I have to have fibs, mid-bands, yellow 1-to-1s inside a trigger. So when these are overlapping, we're going to call them favorable. When they're overlapping, we're going to have the least amount of risk. When they're overlapping, we're going to have the highest precision. When those trigger lines begin to separate, the indecision steps in. I don't know if the market's going to pull back to this trigger line or if it's going to pull back to this trigger line. I don't know if it's going to bounce from one area up here or one area down here. When the triggers split, the indecision comes into play, guys. When the triggers split, you're going to have to use different tactics to figure out your entries. And they become more difficult. So I'm going to share this, and I dropped this in the room as well. I made this up the other day. So the large triggers are moving averages, guys. The large triggers are where we expect price to return. It's a correction point. When the large triggers on the small chart, excuse me, and the large triggers on the large chart overlap in the same price range, it consolidates the range. It makes it very, very precise. And this is what we call favorable large triggers. And this is going to help you pinpoint entries. It's going to help you reduce risk. But your entries do not come from trigger lines. When you have areas, fibs, mid-bands, yellow 1-to-1s inside of that correction point, guys, this is going to help you pinpoint where the market is most likely to continue. This is what's going to allow you to reduce your risk. This is what's going to allow you to maximize your profit potential. So when those trigger lines split, I put a box on both. You can see that the correction point splits, that you're not sure, there's indecision. If only one trigger line has an area inside of it, remember the language of the rules. Areas inside of triggers. At least it gives you a better chance. You kind of have an idea of where it may bounce. And when you have no areas inside of those correction points, you're guessing. That's all it is you're guessing. The advantage isn't clear, guys. So as a brand new user, it's okay to insist on them being favorable. As you grow with the software, you're going to have to use a little chart reading and maybe a little confirmation to be able to trade these split triggers, but there's no doubt in my mind that you will be able to with a little bit of study. So when the large chart says that everything is going up, when the large chart has separation between the small and the large, the large chart, forgive me, and the large chart has cleared trouble, right, and hasn't reached the next trouble, guys, we're going to turn our attention to the smaller, faster chart. You guys are going to be able to find your entry. You're going to pinpoint exactly where the market is most likely to continue. And I'm going to take a picture of the picture, and we're going to walk through this real quick. We do not trade tails, guys. By the time this bar forms, the tail forms, the market's all the way back up here. So what we do is once the rules are met on the large chart, guys, take it out of your peripheral. You have to wait for a reversal bar on the smaller, faster chart. And the reversal bar is not your entry. The reversal bar is a signal that the pullback's beginning. And once you get that reversal bar, you need to identify your trigger lines from the top of the trigger lines to the bottom of the trigger lines. And guys, I'm telling you right now, the trigger lines are not your entry. They are where I expect price to return. Does that make sense, guys? So first I wait for the reversal bar, not my entry. It just says that that little shove is beginning. And then I identify my triggers. Again, not my entry. It's only where I expect price to return. And then watch how the refinement process kicks in, guys. From my highest point of support to my lowest point of support inside of triggers. From my highest point of support to my lowest point of support inside of triggers, guys. This shaded box is where the market is most likely to continue. This shaded box is what we're going to call the window of opportunity. Your job is to activate a limit order just at the top of that window of opportunity because your large chart has momentum and absolutely nothing to stop it. So we're going to anticipate a bounce right off of those areas. Like you're kicking a soccer ball as hard as you can. When it hits that wall, we're expecting a bounce. Guys, this is pinpointing your window of opportunity. This is pinpointing where the market is most likely to continue. Wait for the reversal bar. The reversal bar is not your entry. If you're one of those people in this room that loves to jump into the market hoping momentum carries you, if you jump in on the wrong side of these small triggers, your momentum is done, right? This is a loss of momentum, and thank goodness because it pushes us back to our entry. Reversal bar, identify your triggers. The tighter they are, the less room there is for these areas. Identify your areas. Fibs, mid-bands, yellow 1-to-1s, inside of triggers, all caps. This is where the market is most likely to continue. Your limit order goes right at the top, guys. The same is true for shorts. Reversal bar, not your entry, signifies the beginning of the pullback. Where are my triggers? Where are the areas within? Guys, you have one line inside of favorable large triggers here. Your limit order goes a tick or two below, and this becomes your entry for the highest probability trend trade. You're going to have to practice this one. You're going to have to go back and find this one really when the market isn't moving. You're going to come back and you're going to say, all right, let me find some odds favorable momentum, right? I'll circle this tail just for grins. We'll see what it looks like. Let me find that odds favorable momentum, or let me find that clear path. Let me circle some tails. Let me find that momentum. Let me circle some tails. Guys, all I'm doing is circling where that pullback may have been on a smaller, faster chart. That's probably going to be our best example right here. And then once I do that, this is how you're going to study. I'm going to open up my small chart. And I'm going to see where those circles lined up. Oh my gosh. Support inside of a trigger, son of a gun. They were split. I didn't know where it was going to go from, but my rule said it was probably going to go from here. And if I scroll back and I look at that trigger, clear path in a strong trending market. Doesn't fit my rules, might not be my trade. Kind of in the middle, may not be my trade as a brand new user. And this is where you rely on practice. This is where you rely on everything. With odds favorable momentum and the potential to break because of that momentum, if I get a reversal bar, I'm going to identify my triggers top to bottom. I'm going to refine that look to the only area inside of it. I'm going to right click on my chart and I'm going to buy limit 4 about 2 ticks above it. And if I get a reversal bar, if it pulls back, I have pinpointed the one line on this chart where it's most likely to continue. Does that make sense, everybody? Odds favorable momentum. We have the potential to break that divergence high. We have one line inside of triggers that are overlapping. If this reversal bar prints, I will have entered what's called a medium probability trade. I will never call it a high probability trend trade because my large triggers haven't cleared divergence highs yet. Can you give me a why? We just walked through the whole process of finding an entry. Everything begins with odds favorable momentum. Once I have odds favorable momentum, I have to question, what does my path look like? And if it's got the potential to break, Well, then I may look for an entry. Things that'll keep me out of this trade. Divergence. A loss of momentum will keep me out of this trade. If my areas are on the wrong side of my correction point, it'll keep me out of this trade. There's the reversal bar. That mid-band's right at the base. We'll let that play out, guys, because the cool thing is when I know where the market's likely to continue, I know where the market shouldn't go. And it shouldn't go beyond that correction point. It shouldn't go beyond those areas inside of favorable large triggers. That's where your initial stop's going to go, guys. Your initial stop will be placed about 4 or 5 ticks beyond that window of opportunity. And you're going to say to yourself, I took the trade because of all the advantages. I know it's a trade because I've studied, I trust, I've presented in class, I've done everything that I'm supposed to do. I know that this entry wins more than it loses. And if it blows past my entry, if that small crowd can push me past the entry, guys, I'm going to exit this trade, I'm going to take my loss, and I'm going to wait for the next opportunity. Small losses are a normal part of a positive equity curve. Small losses are okay. They happen. Small losses come from pinpointing, guys, from not jumping in early, from not hoping it goes from the triggers, from not entering on the reversal bar. The smallest losses happen when you enter where the market is most likely to continue, whether it's a long or a short. And then once you get confirmation, once a reversal bar goes in the direction of the trade, you can reduce your risk even more, guys. You can go like a tick or two below that reversal bar because it's already told you we're going with the large chart. And we buy or sell that pullback because on the large chart, you might have 5 or 6 ticks to that target and say to yourself, that's not enough room. But if you're buying a pullback to an area inside of favorable large triggers, that 5 ticks turns into about 27. You go from the potential to make $50 to the potential to make $270, guys. This refinement process for the brand new users, create advantages. Amen, Mike. Not entering at the triggers, right? The bounce point inside of the triggers. That's exactly what I was trying to get across yesterday. And you nailed it. That's it. So, Mike, take this yellow box. Oh, you did. You drew a second one right at the areas. Perfect. And here's the kicker, Mike, and this is the part that frustrates new users, is that it's not guaranteed to come back to that area. There's no guarantees in trading, guys. The only thing I have is a pattern that has been proven to win more than it loses. The only thing I have is a pattern that is repeatable. The only thing I have is a pattern that can be studied, that can be validated. And guys, if you don't learn those basic patterns, if you don't get to where you can identify strong triggers, weak triggers, clear path termination, well then you're going to continually wonder, did I take the right trade? Did I get in at the right spot? Was that a good one? Was that a bad trade? Guys, so this is Chart Reading 101. This is where I start dropping tons of stuff in the room that I want you guys to steal. This is the most ignored homework that I've ever given out in my life because it feels like work, and I don't know what it is. All these alpha male and female overachievers are so used to being successful in life that they feel entitled, that they don't have to work. I paid for software. I deserve to be a winner. Guys, you got to do the work. And I'm telling you right now, if you take 25 pictures each, you're going to nail these concepts in the heat of battle. You're going to nail these concepts when the market's moving. You're going to know whether or not you have a high probability trend trade inside of 2 to 3 seconds. But you can't just take a picture of strong triggers. You have to do what we did in the room, right? Why is it strong triggers? Well, it's strong triggers because of the separation, because of the colors. What does it mean to me? Well, it means that I have momentum. It means that this is a market that's likely to continue. And if you go through this process for each of these, guys, if you fill out this spreadsheet and look at all the freaking answers I've already given you, you're not going to have a problem. That's a scam. That's a scam, Morgan. Scam. Not everyone does. Guys, Nexgen will never Go, hey, we have an auto trading system. Send me money. We'll do it for you and give you the profits. That's people taking your money. And people fall for it all the time, guys. But I'm telling you, guys, and I'm going to ask honestly, and feel free to tell me, because not everybody learns this way. If I take 25 pictures of the market hitting an area and the trigger's not breaking, do you suppose that when the market is moving, I'll have a pretty good understanding of whether or not I've reached a termination condition? Of course you will. Did this thing really just bounce right off of an area inside of favorable large triggers? There's nothing for me to do. Let me put my stop where the market shouldn't go, about 5 ticks below. Ladies and gentlemen, you're risking 6 ticks on this particular trade. It's not guaranteed to win, but it sure has a lot of advantages. I don't care what happens, guys. This is sim. I'm going to let it play out. I'm going to put one target at $100 because I love getting paid. I'm going to put my second target as a fib, guys, and we're not even going to look at it for a while. We'll just see what happens. Once you understand where the market is most likely to continue, you know where it shouldn't go, guys. And once you do this homework, you're going to develop trust. As you do the homework, here's a high probability trend trade checklist with all of the pictures of what it means to have strong triggers or weak triggers, what it means to have a termination or a clear path, the clear path for finding that best of the best entry. And guys, all that is there so you can police yourself, making sure that your trades make sense. You've also got a high probability trend trade checklist coming to you. Print this out, put it on your desktop, learn to police yourself, and even more importantly, guys, learn to write these rules on your chart so that you can associate the look. You can associate the look with the advantages. And then finally, I'm going to give you the KISS plan for the high probability trend trading. Guys, this is your stepping stone in your learning journey. This is your stepping stone, guys. This is where you are going to become a chart reader. This is how you're going to learn to recognize advantages, guys. This is the beginning. Is it working, Rob? Oh, man, you guys already hit your first target. Everybody in this room already got paid. How cool is that? And this KISS plan that I'm about to share with you says go break even once you get paid. Don't have any risk on the trade. Wait and see. It's either going to win or it's not. Who cares? It's sim. But guys, this is your stepping stone. This is your practice. This is the beginning. And this is designed to optimize your chances of success with that high probability trend trade. And I'm going to give you the same one for that medium probability trend trade. I'm going to give you both of them in the room right now. And then through simulation, through study, through class feedback, through continuous practice, guys, you're going to create a plan that suits your needs. You're going to create a plan that's tailored to your personal goals, and it's going to be based on your ability to read the indicators. And if you forego, if you omit, if you skip learning to read your indicators and you just try to get paid, doom on you. Guys, it hasn't worked for anybody yet. So your simple plan for consistency so that you can become a chart reader, so that you can create your own personal plan, is never fight the large chart. That's the first lesson, the most important lesson. Never fight the large chart. Because the large chart leads the way. The large chart are the people that are in control, and those people are not you. The large chart, when you're trading against strong triggers, it's the recipe for financial suicide. Trading in determination conditions, once again, financial suicide. Don't do it. The large chart's going to win more than it loses, guys. The large chart gives you everything you need to know to take an entry. Don't fight it. Let the entry be your entry. And here's one of the things. But mark that entry. Cheetah, right-click on that chart, reload historical data. There you go. So guys, the large chart is gonna, this is it. This is the one that tells you. The large chart is gonna be why you get into a trade. The large chart is why you're gonna pinpoint your entry. The large chart is why. Small chart's just an entry, guys. And these great entries on the small chart, these perfect entries, these beautiful low risk entries, they create manageable trades. So once you learn how to enter the market, you got to learn how to manage it. The same way your entries are nothing but if then. If I have momentum, then I look for a clear path. If I have a clear path, well, then I look for an entry. Your management has to be just as mechanical in the beginning, guys, because you're not a chart reader yet. You don't understand what you're looking at. You are very susceptible to emotional charge, which means that you're going to move stops crazy. It means that you're going to move targets because you're afraid of giving it back. Guys, simulator is where you learn to develop trust. Simulator is where you learn to recognize patterns. Simulator is where you get to the point to where you say, I don't care if it wins or loses. I know I have a statistical advantage. So for you guys, there's a very methodical management plan until you become a chart reader. And you will create your own management plan based on your ability to read your indicators. It all revolves around the perfect entry, guys. The low risk entry. Knowing where the market is most likely to continue lets you know where the first stop goes. And you're either going to get stopped out, and that's a normal part of a positive equity curve, or you're going to get a reversal bar in the direction of the trade. And if you get a reversal bar in the direction of the trade, the only thing for you to do is to reduce your risk 2 ticks above that reversal bar, and then to sit on your hands and wait and see. Either your first target's going to get hit, or it's not. You're either going to get stopped out or it's going to go. Guys, you're never going to be in control of that. But if it goes to your first target, you just made $100. And if you just made $100, you're feeling good. You're like, hell yeah, that's $100. This works. These great entries create manageable trades, even on the trades that don't follow through. I can still make $100. And guys, if $100 is the best I do every day, I'm still sitting on 24 grand at the end of the year. That's not so bad, right? But the cool thing is with all those advantages, it's more likely to go than not. So after you make that $100, go break even. Learn to trust it. That break even takes some of the fear out, guys. You have absolutely nothing to lose. Let it run to the next target or let it get stopped out break even. Who cares? But if it hits that second target, guess what? You just made $300. You're $300 richer, guys, and you are confident, and you're developing trust in these entries, and you're developing recognition on the large chart, and you're creating this ability to talk yourself through advantages. Oh, look at those sons of bitches. They got us low tick and then headed back up. Dag nabbit. But we still made $100. Oh, we traded a 4 lot. We made $300 on this trade, ladies and gentlemen. So now I have to ask you, and Iron Mike, how did that miss you by a tick? That's what we have to ask right now. Iron Mike said that it missed him by a tick. So I'm going to give you guys a quick lesson on entries one more time. Actually, you know what? Let's do this. Bum, bum, bum. Bum, 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 bum. Let's get rid of all our cheaters. You guys want to go through an entry together? You want to walk through this bar by bar and see what we're supposed to do? Anybody? Everybody? We. So here we go. Does the large chart say go? I got all the momentum in the world and I've got the potential to break that area. I need a why in the room, especially from you new guys. Should I look for an entry? Should I turn my attention to the smaller, faster chart and use that language where I am going to buy a pullback to support inside of favorable large triggers? Pete says yes. Pete, this is your trade. Do I jump in here hoping it doesn't go without me? What do you think? Nah. My rules say that I'm going to wait for a reversal bar. Man, it's still going without me. Are you guys sure I shouldn't jump in? Because I'm not getting paid. I'm starting to get a little antsy. I'm getting a little nervous. My palms are sweating. There's billions of dollars traded every hour, and I'm not catching these couple dollars. You guys that believe in the methodology, so there's my signal. Knees are weak. There's my reversal bar. There's the beginning of my pullback. So guys, do I jump in on the reversal bar? What do you think? Should I get in? John says no. Pete says no. My rules say that when the reversal bar prints, let's use a square. I have to identify my trigger lines from the top line of the triggers to the bottom line of the triggers, right? So I enter at the impact on the triggers, right guys? The rules say buy a pullback to the triggers. What do you guys think? Should I enter? Let me double check the language. Use a limit order to at areas, fibs, midbands, yellow 1-to-1s, inside of triggers. All right, so let me refine this down a little bit. Where are my areas? Guys, the only line I see inside of those triggers is a midband. Is everybody with me? I still just have a reversal bar. Let's see if we can get those timestamps on there. That's 9:55 is when that reversal bar printed. Does everybody see how this is where the market is most likely to continue? I'm going to right click and I'm going to put a limit order 2 ticks above it. I'm going to put a limit order 2 ticks above it. Because, Cheetah, we're historical right now, my friend. We're back at 9:55. You're looking at the most current bar. We're right here. So what we're doing, Cheetah, is we're learning how to enter the market. Is everybody with me on this? And then Iron Mike, this is going to help you a lot, my friend. 9:55, we get the reversal bar. The market comes down. There's a 10 a.m. timestamp, guys. 5 minutes I had. And it comes down, and it comes down. Iron Mike and everybody in this room, do you see how that midband is creeping up? Do you see how the midband continues up as price comes down? Everybody see it? It's like playing Missile Command, if you're my age. So here's what you may have to do, guys. You may have to click on your order and pop it up a tick or two to make sure that it remains 2 ticks above the midband. And it comes down, and it comes down, and it comes down, and it comes down. And guys, we are at 10 a.m. and 27 seconds, and your reversal bar printed at 9:56-ish. I'm trying to see if I can break it down. 9:55 was the timestamp. 9:55 was the timestamp. And we finally hit our entry order at 75.91. 2 ticks above the midband. Well, this one was only 1 tick. Iron Mike, your initial entry was down here, right? At 89, because that's where the midband was. The midband came up. You could have been in at 92 even. And now we're in this trade, guys. We are in a long trade, and we had 5 minutes to make sure that our rules were met. Does everybody get that? 5 minutes to make sure that our rules were met coming into this trade. Is everybody... That's the process. And then the market, it bounced right there, right off support inside of favorable large triggers. And guys, my first profit target was hit on the reversal bar that gave me 0 risk. Does everybody see that? Can you say sniper? And guys, this is the live market. We did this live together. I can't make this shit up. Pardon my French. This is a pattern that repeats itself every day. I want you to see where that box lines up, right with the tail, right? I don't have to trade a tail. I trade a pullback to support inside of favorable large triggers. So guys, the rules say out at 100, go break even. When you become a chart reader and your large chart looks like this, you're going to learn to hold this trade. You're going to say, I still have every rule met. And if the market goes up, hold on. Oh. Did that one just run? Oh, there it is right there. Sorry. So the market goes up, right? And the rules are still met. Guys, there's a reversal bar. Does everybody see it? Can we go through the process again at the time of the reversal bar? From the top of the triggers to the bottom of the triggers. We're not going to use these one-to-ones. It's dissected by the reversal bar. It can't pull back to it. It's already pulled through it. So here's a mid-band inside of favorable large triggers. What do you guys think? Can we take another trade with this look? All right, so let's see what happens. All right, we're in the market. And here my rules say that my stop has to go where the market shouldn't, outside of the correction point. So my stop's still in place. I've got about 8 ticks risk on this trade. Let's see what happens. It comes down, stays in the range, and now I have a reversal bar. So I go 1, 2 ticks below it. And guys, if we were in at 95, there's $100. There's $200. And it made it right to $300 before it ever started to fluctuate. So the point I'm making is that if you don't learn how to do this, if you're searching for everything instead of the best, guys, you're going to struggle a little bit because it's too many minds. This is my favorite one. And guys, Friday I go through and I ramble because it's fun for me and because we've had a great week and we're all friends here. Too many minds. All right, who has seen The Last Samurai? You guys seen this one? That's not the one I wanted. Where Tom Cruise is getting his butt whipped by the samurai, right? And Tom Cruise is like, man, I'm Maverick. I'm gonna win this fight. And this guy's like, dude, you don't have a chance. And he's so hell-bent on winning that he forgets, right? He's like, oh my gosh. And the little kid runs over and goes, dude, Tom, you're minding the sword and the people watching and the enemy. It's too many minds. No minds. Keep it simple. It depends, Daryl. So check this out. Let me show you something really cool about what we do. If I take 3 contracts off here at $100 on the first trade, that's $300 in my pocket, right? If I add them back on here and I take another $100 off, I take them off again at $100, stop doing that. Right? So I've made 300 and I've made another 300, right? And I still have another contract to go. If I take that contract off at $200, well then this is an $800 trade. If I'm a chart reader, right, and I'm at this point in my life where I'm like, man, I know that when the large chart looks like this, I'm going to hold for bigger targets. I'm going to make the market pull me out, right? I don't know, maybe 77.40. Maybe at this point what I say, Daryl, if I'm in the KISS plan, I've already exited this trade at 15 and I'm done. Does that make sense? If I'm using the KISS plan, if I'm following that one, I'm already out of this trade and paid. I'm sipping coffee and scratching the dog. But if I'm saying to myself, man, I'm going to let this one run as long as it can. This is the way I trade. I'm not saying this is how you should trade. As long as I'm not closing below these small triggers, I'm not exiting this trade. Because I still have momentum on the small chart. I still have it on the large chart. And Daryl, I will literally chase this market all the way up at the reversal bar marker. I will literally chase that market until it gives me a reversal bar on the small chart, and then that will be my exit. And let me see. I want to say I did one of those this morning. Where I entered a short trade. Let's see if I can make this a little bigger. I entered a short trade. I got slipped really bad and had to get and got stopped out really bad. It was fast. And then I re-entered. I get slipped again, right? And I'm holding and I'm holding and I'm holding. And I have all this crazy momentum, Daryl. And I get out at the first trouble spot and I say, since I'm at trouble, it's got to get me with the reversal bar. And that's what it did, is it got me with the reversal bar there. So your management is going to change as you change. As you grow with the software, your management is going to change. As you begin to recognize more patterns, your management is going to change. As you begin to understand what the advantages are. Yeah, Morgan, that was NASDAQ. It was right after news. It was absolutely flying. Thank you for that. You didn't see the 3 losers I took before it, where I took the perfect trades and got stopped out of 3 in a row for small losses. So that was my redemption trade. Guys, I take losses all day long. I don't want anyone to ever think that I don't. And then here we go, Daryl, that magical AI generated phrase. You will craft a plan. You will craft a plan tailored to your personal goals based on your experience reading the indicators. So Daryl and everybody in this room, the high probability trend trade teaches you how to read your indicators. The high probability trend trade teaches you how to read your indicators. Your chart read will tell you if your rules are met. Does that make sense, everybody? Your chart read will tell you if your rules are met. Your chart read won't tell you to take a trade. Your chart read is nothing but patterns. Your chart read will tell you if your rules are met. When your rules are met, you'll take a trade. And then here's the other thing. You will crap a plan, Ron. Your chart read is what gets you into the market. And ultimately, when you're a solid chart reader, it'll adjust your trading plan. It'll get you to the point to where you hold for bigger moves. It'll also get you to the point to where you exit a trade before things go poorly for you. But if you're not taking pictures, guys, if you're not taking pictures of everything you do, if you're not taking pictures and annotating charts about when it's okay to hold on for bigger moves, if you're not taking pictures, if you're not filling out this spreadsheet, if you're not coming back and studying, Daryl, when I have odds favorable momentum and a clear path, that last contract is holding for Fibonacci support. And Daryl, I'm going to tell you right now, I won this trade. This is my trade. I got paid early. My goal is to get paid. But when it's this pretty, snowball's chance in hell of getting me out of that trade without some serious change happening on my charts. And that's the difference between making $300 or $400 and making $700 or $800. Andy, it works, doesn't it? It's freaking magic. It has changed my game. It has changed my ability to take profits. And what Andy's talking about, guys, do you see how you still haven't gotten a reversal bar on the wrong side of these small triggers? Even though it's stalled, even though it's fluctuating, guys, I don't have a reason to exit. And sometimes it'll get me. And sometimes the buyers will be so in control that they'll run up for 50 points and I'm going to catch 48 of them. Awesome, Daryl. You're going to get exactly where you want to be. And the more work that you put into it, yeah, if you hit a line, Rob, no reason not to take profits, right? So let's cover Rob's question real quick. And let me get rid of everything off this chart. Guys, I draw a lot of my charts. Rob, hypothetically, if you're in a short trade, right, and you're up money and it hits a blue line, is there anything wrong with getting paid there? Of course not. The goal is to get paid. And guys, I don't think anybody in this room that hasn't been with me longer than, a couple weeks, getting paid at the area is awesome. Because when you decide to let hope take over, suddenly you get stopped out, right? But here's the deal, Rob. If I'm short, if I'm short 4 contracts, right? And I take 3 of them off at trouble. Am I pissed off because I give back $100 on just one? Hell no, I'm not. So the idea, guys, is multiple contracts give you the opportunity to try to hold for runners. Multiple contracts give you the ability to test the fates. But make sure that you're getting paid on the majority of them. You can always re-enter, guys. You can always get back in. It still hasn't given a reversal bar. Just saying. All right, guys, so that's my first hour. My hope is that you guys learned something in this first hour. My hope is that you guys are at least beginning the process of trusting the idea that if you have a plan, it takes a lot of stress out of what you do. I hope you're beginning to learn the idea that if you just study the basics, you'll turn it into trades, right? And eventually, well, Ron, that's not a bad day. 100% winners, 2 trades, $880. That's an amazing day. And then, Ron, you know that I'm going to do it because I always do. I'm going to turn it around on you. Thanks for being such an amazing student. Guys, Ron came to me not understanding the software, not knowing how to read the software. Ron came to me not having a plan. Ron went through this process with the high probability trend trade. Ron learned how to be a chart reader. Ron learned how to recognize advantages. And then through study, through class feedback, through continuous practice, he created a plan that suited his needs, that revolved around odds favorable momentum and a clear path. And he got paid in this little chunk. And then he gets paid again on it. Never seen a market chart before Nexgen. Me either, Ron. True story, me either. As Nexgen's funding company comes to fruition, guys, I'm doing so much study about the other stuff that people use to trade the markets. And I want you guys to see something. And then I'm going to take a break. I suck at going on breaks. Let me find a good one. Guys, there are people in the market that have to make decisions by creating their own support and resistance, that have to wait for these breakouts. And let me find a better example. I want one that's not annotated. Let me just go day trading chart, because as I go back and I begin to do this study, here we go. Let me just go to TradingView real quick. As I go back and I start to do this study, guys, I'm absolutely floored that anybody can look at a chart like this and make decisions. Because I have Nexgen. I wonder if we can open up crude oil. Hold on. Futures CL. Let's go to CL. This is the crude oil futures. Guys, this is a crude oil chart. Okay? This is a crude oil chart for the rest of the world. This is a crude oil chart for Nexgen. You know freaking exactly where the market is likely to continue. And I'm telling you, it's amazing. It's amazing. Here I have a little bit weaker triggers, and here my areas are beyond the correction point. Do you see it? If I grab my triggers, I don't have any areas inside. What does that mean? That means that I'm seeing weakness. It means that I don't have rule number 3 met. Does everybody see it? I love that commercial. Where did you learn this, Iron Mike? I learned it by watching you. So let's go through our rules. Smalls are inside of the large, guys. Do I have momentum? Yes or no? Give me a Y or an N. Just large chart first. Okay. Price has not reached an area and it's cleared the previous. Do I have a clear path? Y or N, guys? This is how we read charts. Price has not reached an area. All right, so all of these N's. So I have yeses and I have nos. So let's back up. Are you ready? Let's back up and look at what it means to have a termination condition. I love you guys for the nos. And I appreciate you guys for the yeses. Let me find something that just makes it as simple as it can. So if price reaches an area and the triggers remain below resistance, or if price reaches an area and the triggers remain above support, I have a termination condition. Does that make sense, everybody? If price reaches an area, and this is why I believe language is so important. If price reaches an area, guys, you've got to write that on every chart when you're asking about termination conditions. If price reaches an area and the triggers don't break, it's a termination condition. Flip side, hold on. What's the opposite of termination condition? Clear path. If the small and the large are beyond an area and they haven't reached the next area, price hasn't reached the next area, the path is clear. So I'm going to ask one more time on this picture, guys, after just a quick little synopsis. Price has not reached an area. Let's keep the lesson consistent. So this is what I used to always ask myself. The first thing, has price reached an area? No. Clear path? Yes. Where are my triggers? So has price reached an area, guys? Help me out here. Do I have a clear path? Iron Mike says, but Mark, there was an area back here 1, 2, 3, 4, 5 bars ago. So Mike, if it's not right here, it's out of play. It's done. It's history. This is the girl that you dated before you met your wife. And don't keep looking back to her. It's going to get you in trouble. Right? So, guys, do I have a clear path? Price didn't reach an area. I have to have a clear path. So let's do that one. So one rule not met, one rule met. So if I go through the rules, and guys, this is how you're going to start thinking every time you look at your charts. So far, what I have is I don't have the advantage of momentum because the smalls are inside of the large, right? I do have a clear path. So let me do this. Let's get a tiebreaker. Let's see if I have an entry area. Dun, 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 dun. Here's my triggers. Here are my areas on the wrong side of triggers, guys. Is rule number 3 met? Do I have areas inside of favorable large triggers? No. So if I'm looking for a high probability trend trade, ladies and gentlemen, do I have a trade to take? No. So if you formed an opinion on this mid band, you just got the ever-loving crap stomped out of you, didn't you? Guys, I promise you it can be that easy if you allow it to be. Things that will have a difference between my chart and your chart. All right, let's do that. Because some of us are different. Things that will change whether or not our charts agree. Your time zone. I'm in Eastern. If you're in any time zone other than Eastern, you have a different midnight than I do. And if you have a different midnight than I do, well then our charts are beginning the calculations of creating fibs at a different time, different swings. So time zones will affect whether or not we do. Data provider. So Morgan, perfect, right? You had a termination condition. Your data provider maybe 1 or 2 ticks off, creating tiny fluctuations, creating different fibs. Guys, trade your charts. The days back that your charts are loaded. I'm on 10, so I'm measuring swings from 10 days. If you're on 3 because you have a slower computer, it's going to be different. Does that make sense, everybody? So there's factors that will change things up. Which option? Days back? So if I right click and I go to data series, I'm going back 10 days. So watch this. If I change it to 3 days, some of us don't have computers that are that fast. And guys, let me tell you as well, I reload and draw and break my charts all day long. Let me reload historical data. Let's see if it changes my fibs. But I think that the point I'm making is whether you had the fib or whether you didn't have the fib, right? You didn't have the rules met for a trade. Does that make sense? Whether you had a fib there, whether you had one-to-ones there, whether you had a 98-year-old lady crossing guard saying, hey, don't do it. The rules weren't met, and that's kind of the point I'm making. Morgan, your rules were easier to follow because you had a big, ugly termination condition there. But guys, this is why we have rules. When price hits an area and it hasn't been in over the last 10 days, do you need to load? No. Iron Mike, we're not trying to build the most fib lines, right? And this is where you have to have a little trust in what we do, guys. So this is how your fibs are built, Iron Mike. I love this picture. And I'm going to reference old video games again. So when I open up my software, guys, it goes back 10 days. And if my midnight's different than yours, then the swings are going to be different. And it measures every swing. I don't worry about that, Mike. That's too much thinking. Screw that. I got things to do, brother. I don't look back 3 days even. I look at where my lines are on my chart right now in the moment. What are my indicators telling me? So guys, your software goes back 10 days and it measures every swing in the market. Every swing in the market. Daryl, I know which channel you're talking about. Every up, every down. And it creates Fibonacci projections, retracements, alternates. It goes forwards, it goes backwards. And what it does is it creates all of these fibs, guys, thousands upon thousands of fibs. And then it turns out that my brother is really freaking smart. And he creates an algorithm that weighs them, that sorts them, that gives them priority, the highest concentrations. And from all of these come those pretty blue lines, those pretty red lines, right? But it's an accumulation of thousands and thousands and thousands of calculations, guys. And this happens, this updates every 2 hours on your charts. Every 2 hours, the algorithm kicks in and does it again, which is why sometimes you see fibs that stop printing right at 10 a.m., fib update, right? And your algorithm says that these fibs aren't really in the mix anymore. And sometimes the market stops right to it. And sometimes you'll get an update, guys, and you almost feel cheated when it does. Is you'll be in the perfect trade, right? You'll be in the best of the best clear path trade. And then that update kicks in right there. And you're like, son of a, man. So what's kind of cool is that I don't worry about this fib that quit printing way back here. I keep my attention focused on what's happening in the now, because what's happening in the now is Fibonacci support with absolutely no trigger lines broken through, right? What's happening in the now is a termination condition, the exact same way it was over here. Does that help a little bit, Iron Mike? We could go back and get caught up on everything. And it's probably not a coincidence that this fib that stopped printing is the exact same price that this divergence started printing. So there's people that hang on to it without a doubt. We don't have to be those people. We just follow our rules, right? Let's make money in between the problem areas. Let's make money with momentum. Let's make money with a clear path. Let's make money with rules-based entries. It's pretty cool, right? Yeah, so you can do that, Iron Mike. You can do 5 days, 7 days, but will be different. You know what's easier is, and let me ask this question, and you don't have to answer it. Do you believe the software works? You made the investment, right? You know it works. You're learning to work it, right? Spend a little money, buy a computer. Don't play golf next month. Go buy a fast computer. Make it easy. I've upgraded my computer 3 times in the last 3 years, and my brother's got one in the mail to me right now, even more. So, and yeah, and it will be. And Iron Mike, that's what I love it when Mike Hunt posts, because it shows where you can be, right? But you're not going to get where you can be if you don't figure out how to work where you are right now. So, that was only 18 minutes after I said I was going to take a break. And now I'm going to go take it, guys. So I'm going to mute the room, mic silence. Let's see. It's either going to hold or it's going to break. Right now it's got the potential to break. We'll see what happens. Jonathan, man, there's a couple different ways to go about it. This is why I don't take breaks. And let me see if the link is over here in the resources. Yeah, so that's what happens, Morgan, is my brother, who's never happy, builds big, awesome supercomputers, and then I get his old one. So mine right now is his wife Melinda's old trading computer. There's a link it works out great for me. It's fun to be the little brother. I'll tell you what, Morgan, I used to tear the shit out of his Lamborghini and his 911, and it was being a little brother has perks. Get to drive all the exotics and hang out in the mansion, and this was back when I was still working in restaurants. So it's a lot of fun. I highly recommend it. Trade well. There it is right there. So Jonathan, Easy Trading Computers, there's a link to get you there. And they give Nexgen users a discount. And they give you amazing computers. And my brother's got 2. There's a lot of people in the other room that bought them as well, that love them. That is the no worries. They give you everything. Nah, but he'll hang out with you and have a beer. And that's what I have, Pete. I have a Falcon. Falcon builds absolute beasts. Once the browser version is done, and man, it's getting close, supercomputer won't be a necessary, right? We use the supercomputer and the high-end graphics cards to handle Ninja Trader 8, not to handle the software. And the browser version, where you could literally open it up the same way you do something like TradingView, is on its way, guys. It's on its way, and it shouldn't be long. But here's the deal. I'm going to take a break for real this time. I'm going to mute you guys and walk away. I'm not going to look at anything that you post in the room. I'll see you in 5 minutes. All right, guys, I'm back. Let's get going. And I just want to say real quick, it's already almost 11 o'clock. Don't worry about the clock, guys. I'm not a clock watcher. If we have to go to 12:30 to get through everybody, then that's fine. Then you don't have to, total noob. We will never force you to do anything. It's going to be an option that's available. But no, you can hang wherever you're at. Go where you're comfortable, right? That's kind of like, it's the same thing. If you prefer to not take high probability trend trades, that's totally on you. Totally good. We will not think less of you for you. Absolutely. Guys, did anyone notice the bounce that this area has caused already? Did anyone notice that the small chart suddenly has large triggers that are up and the synthetics are down? Pretty cool, right? You guys knew about this area. Oh, for quite a while. And Andy, you put in there, you're so stoked for Nexgen. I am too. It's ridiculous, guys. Maybe it's not ridiculous. Maybe it's a good thing. I love what I do. I really do. I love day trading. But the one thing that I seem to like more than day trading, guys, is teaching you guys to read indicators. This is such a kick for me. It's so much fun for me. And I look forward to class every day. I really do. All right, so we've got a lot of pictures going on. I'm going to come back and we're going to start right here. 8 o'clock last night. Made the trade. So Jonathan, this is going back this morning. Guys, I'm going to look at a couple and then I'm going to come down back to the chat box. Jonathan, 50-50 trade with 2 divergences. 50-50 trade, not a clear path. So the one thing that I said this morning was study your termination conditions. It's going to pay huge dividends. Not a clear path, multiple divergences, less chance of winning. 50-50 once again. I'm not sure where your potential entry was on this one. You did have momentum. It's not a clear path. It's a 50-50. I don't know where you were thinking. Right here might have been a shot to get up to resistance for sure. But after that, we're just waiting for a reversal bar and a potential pullback. Jen, termination, odds favorable, potential to break, and you nail the pullback right to the area. Remember when we said if there's only one set of triggers with areas, it makes it a little easier? Beautiful, 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 beautiful. Nice job, Jen. Jonathan says more. Odds favorable momentum. All right, I'm coming down to the chat box, Jonathan. You ready? Hey, Jonathan. I want to make sure you're in here. Sometimes I talk to people and they're not here. Let's do this as a classroom. What's happening right here, ladies and gentlemen? Right here at Fibonacci support where the triggers haven't broken. What rule isn't met? What do you guys think? Anybody have an idea on this one? It's not a clear path. Amen. And guys, I'm going to show you something cool, and I will apologize in advance if this, guys, if I ever do this and it hurts feelings. Tape up, play hurt, I guess is what I'm telling you. So the annotation says odds favorable momentum, right? And then price to areas. Smalls outside of large. Not a clear path. Not a clear path. And he says the advantages outweigh not having a clear path. I love this. And guys, this is what happens when you really start getting good at the software. You can say, here's my advantages. Here's my advantages. Here's my problems. Do my advantages outweigh the problems? But this is where we get a little sideways, right? Is we don't have the clear path yet. Momentum is outstanding. It's insane. It's wonderful. But then you even say, well, I don't really have momentum here, though. My smalls are inside the large. So, if you're going to trade into an area, guys, I'm going to tell you right now, if you're going to say This area that has been proven to stop the freaking market in its tracks time and time and time and time and time again. If you're going to sacrifice that clear path, guys, you sure as all get out better have the best momentum money can buy. Does that make sense, Jonathan? I like that you're weighing out advantages and everything, but guys, if you're not going to have a clear path, you better have the screamingest triggers on every chart you own. Because it's momentum that breaks areas, guys. It's momentum that breaks areas. It's not the wish for areas to break. So I love the annotation on this one. I love the thought process. I love everything about it. And then we just get that little bit of refinement that's going to make it easier to avoid this loser in the future. Nicely done, Jonathan. Good job on the annotation on that one. I appreciate that. Makes it so easy for me to give feedback when you guys take the time to write that out. And then let me see where we're at. Then Jonathan, once again, already annotated directly into a termination condition. You got there before the termination condition, right? There's your exit. There's your line. There's your reason to get paid. I love everything about this trade. And in the beginning, guys, as you're working through your plans, let's respect those termination conditions just a little bit more. And then you said from the termination with the momentum, once again, you'd look for that momentum style. You love this trade. You're good at this trade. If you get in here, there's your loss of momentum. If you get in here, it doesn't even blink until it gets all the way down here. Great recognition, Jonathan. And then Jen, thank you for the assist on getting Chart Trader up. Thank you for the lesson on 3 divergences in the same price range. Beautiful. And it pulled right back to the synthetic triggers, didn't it? No clear path. Price corrects to the triggers, guys. Way to not get in at the mid-band, Jen. Way to not trade into a termination condition. These are the best pictures ever. I say it every day. When you take pictures of your rules not being met, what you're doing is you're reaffirming the advantages that your rules provide. Let me see where we're at here. And guys, remember, if you have a question about any of the pictures that are posted when I talk about them, feel free to ask it. It doesn't have to be your chart. Every chart is open game for asking a question. All right, Pete. I'm going to do like 3 or 4. Pete, Paul, Pete. All right, we'll do that one. All right, Pete. So knowing what we know from today's lessons, what's the one thing that could have killed this trade for you? What's the one thing that you were trading into? You remember? Termination condition, right? You identified it, but you took the trade anyway. That's okay. You made a choice. And then remember when I said if you're going to trade into an area, you better have the best momentum on both charts? Pete did. And when it pulls back, it closes the gap right to the large triggers. Look at the reaction off of support. And nothing blinks. And Pete says, man, I'm going back to retest the area. I love this trade, Pete. This is how you trade into an area. You let it correct to the triggers, right? Make sure there's no divergence. Make sure the strength is there. Breaks rule number 2 like it's getting paid to do it. But with all the other advantages. And then this is a cool example. If there were divergence here, it would change my perspective. If there were weak triggers here, it would change my decision-making process. I like that one. I like the way that was handled. And then Paul, odds favorable, potential to break. You don't even wait for the reversal bar. You're in right at the area. Beautiful stop placement. Money, money. Beautiful trade, Paul. Same one from Pete. Same one from Pete. Triple divergence kept you out of another short. I love it. 3 divergences may reverse the market. Pete says, I remember that lesson. Almost took another short when it hit the mid band, but triple divergence kept you out. So Pete, this divergence, as far as you want, TLC, show me a picture of what you're talking about. Please, because I'm not completely understanding the question. Oh, okay. Right on. Pete, are you with me in here? Is Pete still here? I'm searching. Cool. So Pete, I love this annotation. And guys, this is another example. Hey, Ron, enjoy your weekend, man. Take that Monday off. Go fishing. I'm jealous. So Pete, this is one of the things, it's hard to recognize in the moment because we really do get excited about stuff. I know I do. But if I draw a box and extend to the right, do you see how your small and your large get below the area? The same way a small and a large would get below support or above resistance. Once these triggers break, we're going to reset the count. So here we have 2 divergences. Does that make sense? I'll use that same idea on termination conditions. And then your next picture is absolutely right. That's where your third divergence does in fact come in. Great pictures, man. Good stuff. And I love the advantages where you took this trade. Nicely done. Hey, TLC, do me a favor. Just because this is an educational room and it's live and the education is going on, if you want to play with the trading bot or the fact bot, will you do it in the other room? Otherwise, I feel compelled to come back and answer every question that you post in this room. Thanks, man. I know that you're just having fun with it and seeing what it can do. Go do it in Trader Chat. And everybody there will not worry about it. But here I get this instant urge to make sure that you understand whatever it is you're asking. Thanks, man. I hate to be a drag. All right, GWC. I love it. GWC says everything is up. Just open the charts. And he said, I didn't get the best entry, but man, everything says this market's going up. Let me take it. And GWC, I have to tell you, I have really enjoyed watching you trade this week. I have really enjoyed watching you just beat this market up. Sometimes it's a reversal from nowhere, Rob. Sometimes it just turns from the middle of nowhere. And Rob, this is a great reminder that we're not in charge. While fibs give us a very clear indication of where the market may reverse, sometimes there's just some jackass with a lot of money that's going to shove it the other direction. And this is why we focus on rules. Yeah, that's a great question. Nexgen's amazing, but guys, sometimes the fibs hold, sometimes they don't. That's why we use the trigger lines. Sometimes the market turns from the middle of nowhere. And Rob, there were 3 divergences right at the top there. Jen dropped a picture in the room. So even though the large chart didn't have that termination condition for us, that small chart termination condition kept everybody out of that long trade. And then here's a 50-50, right? No divergence, right back. Did not buy here because large not through and last bar on large red. Jen, did you make up a rule on me here? Yeah, no, that's a great question. Always ask. Let me double check. Momentum, clear path, entry area. Hold on, let me zoom it in and see if I can see where it says something about large chart bars being red. No, it's not there. So let's go through just the rules, right? No. No. I feel like, guys, I'm going to tell you, I'm going to warn you right now. I get comfortable with you guys, and I really do feel like we get a rapport. Fine line is in the back. So check it out, Jen. Termination, right? Full reversal, 50-50. Can we agree without question? Large chart says, let's look for an entry. Are you cool with that? Does everybody see it? Termination, full reversal, odds favorable, and it's a 50-50. And I've got these stupid split triggers. So let's just go. Oh, awesome, Jonathan. Whoops. Oopsie. So there's your first correction point, right, Jen? Absolutely nothing going on in there. You know this isn't your area. Can we agree? There's your second correction point. And look at those blue fibs just sitting there, sexy as they want to be. So Jen, this is where you'll get to a point where you'll say, my large chart said this thing is more likely to break that area and continue up than to bounce. Is that a fair read on the large chart? I feel like that's a pretty good read. Okay, and then your brain says, but Jen, those triggers are stupid. Can't do that, right? And you're like, I'm not taking this trade. Well, your brain said red bar large chart. So we're going to work that out. We're going to keep it focused on just rules. And then your brain's going to say, but Jen, with a couple exclamation points because it's excited, we can wait for a confirmation bar. Then enter. Then our risk is established. And we kind of circumvent that idea that it's not perfect. The large chart says we're more likely to go up than not. And the split triggers say that it's a little more difficult to pick our entry. So if we just say, let's wait for an up bar, right? Let's wait for a confirmation bar. Let's wait for something to say that it's time to go. Let's see if you got it. Back there at 926. Jen, there was your confirmation bar, right? And if you were in at 70, you probably made $100 and maybe went break even. And then you look left again and you're like, holy crap, it's still amazing. Maybe I'll enter on the next confirmation bar right at the area, right? And this is kind of that next level trading. But don't make up rules is kind of what I'm saying, guys. I've never in my life teaching a class, never in my life said be scared of a red bar. All it means is that price went down a little bit. The same way, we had an up bar here, Jen, and you said, look at where it corrected, right? Same thing. And Pete didn't say, I'm worried about a green bar. Pete said, it went right back to the correction point. Let me take a trade. So I think it's a great lesson there. I think it's a great lesson there because you're going to be tempted, everybody. You're going to be tempted to create these scenarios. And then, Jen, the other one that I didn't mention was 3 divergences in the same place, confirming that this has a great shot at being the place where the market stops. And then your chart reading will tell you that because they didn't make it to the key area, well, hell, they may give it another shot, right? And they did. They did give it another shot. And I don't think they made it last time either. They sure got closer, didn't they? So you're going to learn to piece all these things together. You're going to learn to piece all these things together as you grow with the software. And there'll be so many more opportunities for you guys to get into the market, to capitalize, and to feel comfortable. Because you're literally talking to yourself about advantages rather than disadvantages. Does that make sense? Instead of saying, oh shit, a red bar, you're saying great bottom, odds favorable, no divergence, one line. I can't wait to take this trade. And it's pretty cool because you will feel that transition. You will have this moment where you're like, oh my gosh, I would have never taken that trade 3 months ago, but now I can't wait to take that trade. And then here's the same one. You and Pete are clearly on the same wavelength. So Pete, did you catch the lesson that we just talked about? When the triggers are split, when you're just not sure, it's okay to wait for a little confirmation. It's all right to wait for that reversal bar, because what does the reversal bar do for you? Same thing here. What it does is it establishes your risk. It lets you know exactly where your risk needs to be. And Pete, I'm going to point this out because this is one of the greatest lessons that I had to learn. And I did it a lot. Don't get stopped out at an entry point for your trade. Does that make sense? Don't put a stop at support inside of triggers when the large chart looks like this, because this is where the market is most likely to continue. And I'm telling you, it's such a big thing. Where's the client trades? That when you go to management, where did it go? No exits where entries should be, right? Don't put your stop at support inside of favorable large triggers. And Pete, I say this with such confidence because I've done it more times than I care to admit. I've done it more times than I care to admit. Guys, that termination condition is still holding. I love it. I love everything about it. All right, let me see. Who's next? Good stuff. Great lessons here, guys. Y'all are the reason that this class is good, guys. It has nothing to do with me. I'm looking at markets. I'm looking at trades that aren't even moving. I have zero fear. You guys are getting out there in the trenches, taking pictures, having conversations, allowing me to help you read your indicators, and I sure do appreciate you for it. Let's see who's next. Andy Man. The Andy Man can. Andy Man says that when I have odds favorable and a clear path. So Andy, I have to ask, why so late on the entry? Why did you let it print 2 divergences against you before you ever considered getting into that trade? What happened here? Were you second guessing it? Were you going through the math? I did that a lot, where I would say to myself, is this a trade? I think it's a trade. I'm not sure if it's a trade. It might be a trade. Is that a mid-band? Shit, I don't know. What do? Do I get in? Hold on. Oh man, it went without me. Wait, it's pulling back. Okay, you just weren't there. Guys, this is totally normal, but I want you to see the progression here. And Andy, thank you for posting this. I want you guys to see the progression here. The first potential entry is beautiful. Strongest triggers ever. No momentum loss, nothing. The second potential entry has a divergence. It also has weak triggers. The third potential entry has smalls below the large, a second lower divergence. And then if you tried that last one, you were trading against 3 divergences, right? So guys, this is a great lesson on reaction time. And if you weren't in front of the market, Andy, then there was no reaction time, right? You got caught up in the fluctuations. You got hypnotized, highway hypnosis, instead of wondering if your rules were met, right? And guys, this is such a good lesson because that's the best one, right? And then this one is starting to have problems. And by the time you get here, it's just this giant red flag. And the more that thing fluctuates, the more this large chart goes crappy on you, the less likely the large chart is, right? You're going to start seeing those big moves. And then, of course, we got to talk about the stop. And you just got caught up in it and missed that third divergence. And this is where being able to react in the moment, the more repetitions you have, the quicker you're going to react to what your charts are telling you. And that's why we go through and we take a million pictures. And that's why I say the same thing every day, because I promise repetition creates recognition. And recognition is what saves bacon. In Muser, odds favorable, clear path, late entry, but you knew exactly where the stop goes. And you get paid on the way up. Muser, I like it. Let me read what it says. Off of divergence, I place a buy, stop. Why did you do a stop reversal, Muser? Because it was outside? Because it wasn't inside of favorable large triggers, you said I'm going to force it to confirm? Brilliant. Brilliant. Not a late entry. That's my apologies. That's a very well thought out entry, which means that your stop, your risk was already established and it didn't get you. And then it headed up. So then we have to ask, why the exit? Predetermined? Was the exit just because that's where your exit is? And that's okay. Like if that was your ATM strategy and that's where you decide to take profits, totally cool. Can I give you a lesson that's going to get you paid a whole lot better? A whole lot more? Andy and I talked about this one yesterday. And Muser, I'm going to tell you right now, this one changed my life. As long as my price bars aren't closing on the wrong side of these triggers, I'm holding trades. And I'll show you some examples of just as long as the smalls are outside, there's no reason to exit. Because if we go back and we look at a small chart, we did this yesterday and it was kind of fun. If I'm in right here, for whatever reason, let's pretend rules were met. As long as price has not closed on the wrong side of these small triggers, there's no reason to get out. Short, never a reason to exit until a close on the wrong side of the triggers. If you were long, never a reason to exit until a close on the wrong side of the triggers. Does that make sense, Muser? And I'm telling you, I've incorporated this into my plan starting this week. This week was the first week that this ever clicked with me. And the cool thing is, and this is what Andy was just saying, and let me get these off here so I don't crash my Ninja. And let me go, because I have a picture of it in here from one of my trades. Whoops. What did I do? Open editor. Because I sent it to my brother. I was like, dude, I'm working on this. And it's paying these crazy huge dividends. I want to find the one where I have my stop placement in. Hold on just 1 second. These are hard to see. Let me make them bigger. No, I don't want it size. I want it by date created. Man, all right, I won't even worry about it. TLC, what I said, hypothetically, if you were in a short trade, and I'm not saying this is a short trade, don't ask me about rules for it. I don't have any. If I'm in a short trade right here, as long as my price bars, as long as price doesn't close on the other side of these small triggers, I'm not exiting a trade. Does that make sense? As long as price doesn't close on the wrong side of these small triggers, I'm not exiting a trade unless my target's reached. Well, that's a reason to exit a trade, right? But if I'm holding for the bigger moves, if I'm in the middle of nowhere, there's nothing to stop that market, I'm not getting out. And then I'll get paid at the blue line. So the same thing is true. If I'm in a long trade right here, for whatever reason, as long as price remains without a close, I'm holding this trade. And this is what used to scare people out. Check this out. Do you see how it didn't close? Do you see how it didn't close on the wrong side? And it kept going? Is anyone else? Guys, these fluctuations used to get me. I used to tighten up and try to preserve profits. These fluctuations used to get me. And I really wish I could find the picture of my stop placement. Here's one from yesterday. Everything says down, guys. Everything says down. I got paid at a blue line. Right? But as long as it was strong, I felt comfortable about getting to that blue line. And I'm telling you guys, if you're taking those trades, that's not one. If you're taking those trades where you just jump in, then it's pretty awesome. I wish I could find the one where I had my stop in place. I take so many pictures, ladies and gentlemen. I take so many pictures. All right, we're back up top. Maybe that's one. I don't know. Short trade going. So practice it. But if you go back and you look at the small chart, guys, the market doesn't go the other direction until the close, right? And I'm not saying jump in all willy-nilly. But what I'm saying is that when your rules are met, and you're in a trade, that's going to become a management lesson for you. That's just my snag it, Jonathan. It's only 2,600 pictures because it's about 8 months old. And I delete a lot of them as I go through. I delete more pictures than I keep. But yeah, we got pictures that scroll back forever. Here's one from January 29th. What are we talking about in January 29th? Oh, we're talking about TechSmith. That's from January. Look at that. The market goes down. It's amazing. So, great management lesson there on how to hold for bigger moves. One for stupid. So Mike, all right, you just spurred a story, Iron Mike. You brought this upon yourself, my friend. So when I was in how old was I? I don't know. I was just before 30. My oldest was a couple years old. I used to road race motorcycles. I used to road race 600 endurances, had a blast doing it. And we were out on the track one day. And it was a practice. It was right before a big endurance. and it's just practice. And we're out there. And I'm dragging knees and doing little wheelies coming out of turns and having fun. And I'm going at about 60%. And my buddy blows by me. I mean, blows by me, like full race pace. And he looks over his shoulder at me, and I can't see his eyes because of the helmet, but I know that he's not happy. And he comes to me in the pits, and his exact words, dude, what the F are you doing out there? And I'm like, Bradley, it's just practice, man. It's just practice. I'm not going to go 100% in practice. And he goes, how are you going to perform in a race? How are you going to perform under pressure? How are you going to know what to do when it's real if you don't practice like it's real? And Iron Mike, When I see people with simulated accounts for stupid fun, their stupid fun bleeds into their rules. Because stupid fun results in lucky results. And lucky results, your brain doesn't know the difference. Your brain just thinks you're making money. And stupid fun is why I lost $5 grand in a couple hours the first time I went live. And that's exactly it. Train like you're going to fight and fight like you're going to train. So you can do whatever you want. But I can tell you historically, that practicing the wrong rules typically results in executing the wrong rules for your trades, which typically results in losing money, which typically results in you having a bad day. And I don't want you to have a bad day. That's my story. But again, do whatever you want. Odds favorable, clear path, money, 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 money. Easy peasy, guys. Odds favorable, momentum. Look for the small chart for the opportunity. Amen, Cheetah. That is the absolute best look you could ever hope for. Looking for a high probability trend trade. Perfect, perfect, perfect. Adriana's been in this game long enough to know that when she has odds favorable and everything says up, she'll get in at the mid-band and she'll just hold that thing until things go south. Adriana, beautiful trade. Beautiful, beautiful, beautiful trade. Odds favorable, clear path, money, money, nothing breaks. Just took a trend trade. Money, money. Perfect. Are you guys starting to see the similarities in the ones that are winning? Are you guys starting to see the similarities when people are doing the same thing over and over? Notice that there's no closes on the wrong side. There was one. Guys, this is just a strong trending chart. Everything going up. Beautiful trade. My hope for all of you is that you're starting to recognize that the same darn thing happens over and over. So this weekend, 350 pictures. So I'm going to do something. I do this a lot. Here's a high probability trend trade short. And it has odds favorable, a clear path, and a pullback to resistance. And here's a high probability trend trade long. And it has a clear path and a pullback to support inside of favorable large triggers with momentum. And here's a high probability trend trade long. And it was odds favorable and a clear path and a pullback to support inside of favorable large triggers. And here's a rules met trend trade long, and it has a clear path and odds favorable momentum. And look at this, guys. This was taken in the March contract of 2023. Doesn't this look just like that crude oil trade you guys made money on today? Do y'all see that? What I want you to say to yourself is that it's not the wins, guys. It's the patterns. Learn the patterns, because the patterns repeat themselves every day. The patterns, the process, are why you're getting paid. It's not your desire to get paid. Go through that spreadsheet this weekend. Start to believe in it. GWC believes in it. When his chart says up with strength, he'll let it clear the problem area. And as long as his bars are outside of that green, he knows. He knows that he can get paid. It's not a high probability trend trade. But he knows that this look on the small chart creates opportunity. And look at his exit, getting to the wrong side of the small triggers. GWC, I said it earlier, I'm going to say it again. You found your groove, my friend. You found your groove. And I don't know if you guys can see it. He's trying to hide that he's up over $1,400 at 11 a.m. All right. Andy, you ready to turn this into a lesson? Man, we're almost through our pictures. Very cool. All right, guys, 50-50 trades. Can we talk about them real quick? So the language that I use every morning, guys, the language that I use every morning is that the small triggers must smash through the area. The small triggers have got to absolutely smash through the area. If your small triggers poke their head, right? If your small triggers just barely eke, if your small triggers don't go screaming through the area, ladies and gentlemen, your 50-50 is probably going to suck. Can I get like an amen or a hallelujah or something? If your small triggers peek their head like a prairie dog trying not to get it shot off, that's not a 50-50 trade. If your small triggers absolutely smash through the area 3 or 4 points, that area has the potential to break. You guys, I know that it's weird, right? He's like, oh, but he said if the small triggers go through, and maybe it's my fault here, and I'm gonna own this one. I'm gonna take the blame on this one. Hold on, let me go back to my editor and let me go back to that picture that I created today. Where's it at? Man, I take a lot of pictures, guys. Was this today? No, that's old. Here we go. I take so many pictures. You ready? So here's that one that I did right here. Smalls smash. 2 to 3 points minimum. All right? So if I'm looking for a 50-50 trade, I want those smalls so far through that they're going to have trouble turning on me. I want those smalls just going through. Does that make sense, Andy? I say smash every day. I probably need to say it louder or need to define smash. So you prairie dogged, right? And there wasn't any divergence, and I like that. And there was an area inside, and that's cool, right? But we're just kind of meh. This is where I don't disagree with looking for the short. I really don't. But if it's kind of like meh, that's a technical term, guys, used in day trading. Maybe that confirmation bar, right? Because when they just barely overrun, guys, that could be overrun. Fibs are good. Fibs are great. Fibs are solid. Fibs are freaking amazing. But remember that your Fibonacci areas are an accumulation of thousands of calculations, which means that they are in fact areas, which means that it's not uncommon for the market to stop a tick or two below it or above it, right? And it's not uncommon for it to go a couple ticks past. So embrace the idea that they're areas. And here we go, old guys. It looks like Yar's Revenge, right? You remember that one? Where the fly has to shoot through? So if my triggers just peek through, I'm very suspicious. I'm very suspicious that it might be just a little bit of overrun. Great picture. Awesome picture, Andy. Great lesson. Little bit of overrun, weak triggers, right? And then it comes up and it's coming up and you're just looking for that opportunity. Why are you looking for an opportunity, Cheetah? Yeah, me too, Daryl, 2600. So one of my best friends growing up, his dad was an engineer for Atari. So we got to play every 2600 game before it came out. We got every demo version, every tester version, and sat in his house and played video games till our eyes bled. It was pretty cool. So Cheetah, are you with me in here still? I'm going to make a suggestion. Every time you say it's time to look for a trade, I want you to mention momentum. And I want you to be very clear about whether you have it or you don't. Why? Because momentum leads the way, right? Here's the other thing. I want you to reference on chart whether or not you have a clear path or whether it's a termination condition. Because what we're doing right now, Cheetah, is we're training our brains to see advantages. We're training our brains to say, I have momentum. I have a clear path. So, Cheetah, with your small triggers inside of the large triggers, that momentum really isn't the best look, right? So what I'm trying to do is I'm trying to get you to the point to where the first thing you ask yourself every time is, do I have momentum? And then you relay that thought process to the chart. Because what happens is that when you post in the room, you and I have a conversation about momentum and what the best momentum looks like and what slowing momentum looks like, right? And then if you mention the clear path, you can say price didn't reach an area. I cleared the previous area. I have a clear path all day. Absolutely. So Rob, not a clear path. Triggers didn't break the area. Does that make sense? And then when is the path clear? When the small and the large triggers clear the area and haven't reached the next area, haven't reached the next potential termination condition. So absolutely, a clear path means that there's nothing in the way. Just like it sounds. Good stuff. So Cheetah, I like it. You have that termination and it reverses and there's momentum. But if you get in the habit of talking about these things every time, it becomes easier to recognize them. It really does. It becomes easier to feel confident. Because you're not saying, I think it's time for an opportunity. You're saying, holy crap, I have momentum and a clear path. I dare them to keep me out of this market. So awesome picture, man. And once again, thank you everybody that's posting. You want to take a mom trade, but anything can happen, triggers say no. I like it. So Rob, let's say hypothetically, can we play the what if game together? Let's say hypothetically, you said, you know what, Mark, that's not a good bottom because the triggers got through the area and that mid-band held and everything turned and went down. And I know that my triggers aren't the best on my chart over here, but I've got nothing but a clear path. Are you comfortable making that read? I think that you were because you were looking for the short, right? So Rob, can we say this represents the last line on that chart that's going to piss me off? And you're talking about the jump in trade, right? You're talking about the idea of just jumping into the market. So here's the deal. If you just jump into the market right here, I hate these red arrows. If you just jump into the market right here, Rob, was there any reason to jump out? No. So what you're saying is that that was a bad bottom and the mid-band held and these triggers never blinked and the path is clear and I'm below everything that could be problematic for me. If I jump in, and I'm not saying to jump in, at least I have a plan. But here's the deal, Rob. When you do not have odds favorable momentum, right? When you don't have the best look right here, you might jump in and it might rocket to the stars. Because you don't have that large chart momentum pushing you. And only you can decide if that's a risk you're willing to take. Does that make sense? So if you just jump in, and this is, poor Jen, I beat her up a little bit on this yesterday. If you jump in right here, the only thing that I want you jump in people asking, where is my stop? Where are you giving up the fight, Rob? Where does your testicular fortitude run out? And this is the problem with you guys that are jumping in. And this is the biggest problem I see with users that are jumping in. I jump in, I'm not sure why. I hold forever, I have no exit plan. And guys, this is the biggest problem. Why, Rob? Because you're scared? Maybe. But the problem is, this happens because I don't have a plan I trust. Guys, arbitrary entries, jumping into the market happens. It doesn't have to go. Never has to go. It never has to do anything. Never has to do anything. Rob, it turned from the middle of freaking nowhere. Turned from the middle of nowhere. You thought you were going short and it pushed back up, right? Didn't even have the best look, but it kept going. So, guys, the market never has to do anything. The market doesn't owe us anything. We live in a world of probability. Anything can happen triggers. Look at anything happening, Rob. The fact that anything happened down here instead of right here is complete chance. It's complete chance. Which is why we trade patterns that are proven to win more than they lose. Which is why we focus on having rules that are high probability. Which is why we trade the patterns that have been proven, that have been tested, that have been validated, that create confidence. And Rob, I want you, when you get that coffee cup, I want you to cross out stops with the biggest, blackest Sharpie that you have. And I want you to write money in its place. And I want that coffee cup to say, I hate money. And then, when you buy a coffee cup that says, I love stops, I want you to write and money underneath it. One of the biggest things that they tell new users trading, and when I say they, I mean like the CME and stuff like that, guys. When the Chicago Mercantile Exchange has on their website advice for new traders. Let's see if we can find it. Set aside time. That's smart, right? Start small. Time those trades. Cut losses. Be realistic about profits. Guys, that's not even futures trading. What's the number one advice you'd give a new trader? Understand the markets? I disagree because I have Nexgen. I don't have to know jack squat about the markets. I just have to learn patterns. So I love it, guys. There's a million things in there. There's a million things in there that are about what it means to become confident, what it means to mature as a trader. I've Googled it. You guys know me. I always Google stuff. 6 signs. Whoa, that's huge. 6 signs that you know you're maturing as a trader, guys. The first one, Rob, not a coincidence. You manage your risk before you manage the reward. And here's the cool thing, ladies and gentlemen, is you're managing risk before you ever enter by having momentum. And you're managing risk before you ever enter by having a clear path. And you're managing risk by getting in where the market is most likely to continue, not just jumping in and hoping for the best. And then you manage your risk further by using stops, by having that in place. You'll find yourself relaxed when you're taking trades because you're trading a plan, not emotion. You'll find yourself relaxed because you're not hoping that it wins. You don't give a shit if it wins. Pardon my French, it's Friday. The only thing you will find yourself concerned with once you believe in your plan is whether or not you executed your rules properly, because you know that your rules win more than they lose, which means that you will not force or chase trades. You'll insist that the market give you your trade. And if it's your adrenaline fix, guys, I say it all the time, go jump out of an airplane. Go swim with sharks. Go do something that'll get your adrenaline up, right? Date a redhead, whatever. Don't let trading be your adrenaline. This is a business. You're maturing when you follow your plan, when you just don't care about every tick in the market, you realize that the market trades millions and millions and millions of dollars every minute in the futures market, and you only have to capture about 500 of it a day. And then this was the hippie part of me, and I wanted to make sure that this got in here. Man, total noob. My wife is about half redhead. Her mom is full redhead. My wife has just a little bit of red and all the aggression when need be. But she's the most wonderful woman ever. And guys, this is a huge one. Your worth as a trader and your worth as a person are two very separate things. Your ability to trade has nothing to do with whether or not you're a good human. Your ability to trade is nothing more. Man, don't put that in the room, Morgan. You're going to get me in trouble. I'm kidding, man. I'm kidding. Your worth as a trader. Oh, don't do that. HR department's going to get me. I get that a lot. Has anyone ever beat themselves up for losing a trade? I have. Has anyone ever beaten themselves up for taking the wrong trade, for breaking a rule, for losing a trade, for moving your stops too soon, for taking profits where you shouldn't? And you take the time out of your day to punish yourself for this, guys. Don't do it. And one of the things is every time you take a trade, I want you to pretend like you're your child, right? Guys, if my kids took the wrong trade, I wouldn't chastise them. If you guys take the wrong trades, I don't beat you up. You're like my kids, even though some of you are older than me. Because beating yourself up, all it does is it creates negatives, guys. It creates negative emotion. It creates adrenaline. It creates dismay. And then you've got to work yourself out of that to start thinking clearly again. So if you know that that's one of your personality traits, where you're going to beat yourself up, where you call yourself stupid, don't do it. Go like this. Every time you take a trade that doesn't work out, I want you to ask yourself, did I follow my rules, right? Every time you take a trade that doesn't work out, all I want you to do is annotate the chart. Let me find a chart to show real quick. Every time you take a trade that doesn't win, this is all that I want you to do. I don't want you to worry about anything. I don't want you to worry about the wins or the losses. What I want you to do is I want you to focus on the process. Did I have the momentum that I needed to take this trade? Yes. Did I have a clear path? Yes. Did I wait for the entry? Yes. And guys, if you answer yes to all of them, then you gave yourself this huge advantage. But here's the deal. If you answer no, instead of going, oh, I'm so stupid, I'm brand new and I didn't follow that rule and this sucks, identify the rule that you didn't follow, right? Whether it was, yeah, Daryl, me too. Whether it was trading into a termination condition or whether it was jumping in too soon or jumping too late. And then guys, go back to the trading guide. And instead of spending the effort beating yourself up, go to the trading guide. And you know what? Let me reinforce these termination condition rules one more time. Instead of going back after the market with a sour taste in my mouth, let me just take 3 minutes before the next trade and let me help myself do it a little better. And guys, it's hard to do, and I'm guilty of it too. And that's why I sound like such a hippie guru. Not because I can do this every time. I'll revenge trade with the best of them, guys. But I've found that the more that I stop worrying about the result and more about the execution, my day becomes a lot easier. My trades become a lot clearer. My profits become a lot higher because I really stick to my plan. And guys, I've got my trading plan printed out on my desk right in front of me. And I don't trade without a 100% solid trading plan in front of me. And even with it right in front of me, bold print, everything huge, I still break my rules sometimes. I'm going to tell you right now, I still break my rules sometimes because I'm human. So anytime I break my rules, I have to go back and I got to go, what rule did I break? Why did I break it? How am I going to avoid breaking it the next time? And I go right back into the process. So that's kind of a cool way. I like this one. This is a good one. And guys, now I'm just kind of flapping my gums because we're all out of pictures, and it's the end of the day, and it's the end of the week, and it's all the ends of everything, right? But to minimize your learning curve, I haven't done this one in a long time. To minimize your learning curve, you have to post pictures of your trades in class, guys. Every trade, win, lose, or draw. Because if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. And how are you going to know the distance? You can, Pete. They're not obligated to answer you, but you can ask. Guys, to be sure, you need feedback from us. We're here to help. Don't ask who they're voting for. If you place a trade on simulator, guys, if you're participating in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong when new. And this is part of the educational magic Nexgen offers. A lot of people have. I've taken a lot of them, Pete. I'll answer any questions you have about it. And I've also blown out funded accounts. I'm happy to answer questions about that too. Yep, I've done it, Morgan. And now you're here. And now you're going to do it right, right? One of my favorite pictures. Pete, just type it in, man. Yeah, it might be, Morgan. Just type it in. I don't want to become your Apex resource because I don't work for Apex. If that makes sense. Hold on. You guys know that I spend a lot of time writing these little blogs for you, right? So, Pete, what does it take to pass an evaluation? I'm going to drop this in the room. I wrote this out. This is based on my own experience and countless hours of research online. You have to have a plan, and you have to practice your plan. And your evaluation in Apex, Pete, is testing the plan that has been proven on simulator to win more than it loses. It's not where you know. And then we're going to give you everything you need, guys. I'm going to give you the plan, right? And you have to commit to either its rules met or not. You have to prove on simulator that you can follow your plan. You can't change your plan once you go live. You have to get paid at trouble. If it's Apex, you have to have a daily goal and a daily stop and go back to simulator if either one is reached. And you have to have a stop loss in place, guys, because most traders think that it just takes one good to do it. And you have to understand the rules for the evaluation that you're in. And Pete, this is where most people screw up evaluations. They get in and they're so starstruck on making money that they don't take time to learn how a trailing drawdown works. Or they don't understand that if more than 30% of their profits come from one day that they're not going to get paid out. And they don't understand that if they're not using stops that they won't pay out. So learn the rules for the evaluation. You know, I've never had a problem with Apex's support, and I'm not trying to defend them or not. Most of the times when I was making mistakes, it's because I didn't read the instructions. Blame it on the testicles. Most of the time when I was making mistakes or not realizing something is because I didn't read the instructions. When I couldn't get my data to start working, it's because I didn't watch the video on how to get the data to working. When I blew out an account because my drawdown got hit, it's because I didn't watch the video on how to get the drawdown. You're welcome to DM me, Pete. Just send me a private message here with whatever questions you have. I'll do my best to answer them for you. But if it's outside of my scope, then I'm just going to have to tell you it's outside of my scope. Absolutely. And then you're an owner. So you can go over to Traders Chat and ask away, and you'll get 1,000 people that are excited to share their experience with you. And that's a great place to get questions answered as well. So guys, you can take care of that resource as well. But that's it for me today. That's it for me this week, guys. I'm going to go into the weekend